Welcome to the investing group. We have some new faces here today. We are live streaming for the first time on Discord, so it'll be kind of an experiment, but we'll learn as we go. And we're just going to dive right in. Just feel it out. Hey, Al's here, Quinn's here. Come on. And then, yeah. Actually, let's start by doing the whole go around the room thing, since we have a lot of people here and a lot of new faces. So once Al and Quinn get seated, we'll get going. What's that?
Quick housekeeping. The mic picks up the whole room. Just kind of make sure you talk at the mic.
Yeah.
So for people online.
Did I say the disclaimer yet?
No.
Okay. By being here, you consent to being recorded in audio and video, and also nothing we say here is investing advice. Just, it's just informational content. All right, now we won't get sued. Awesome. Okay. So let's start. Mohammed, do you want to just tell us about yourself a little bit?
Sure. My name's Mohammed. I'm 20 years old. I'm interested in investing and politics and the market in general. I got into investing a little bit before April 9th, so that was quite fun to deal with. And yeah, ever since, it's been a roller coaster.
Mario Sanchez. I've been investing for several years. I actually work at the Federal Reserve Bank of Chicago, but building operations, nothing to do with rates. And now part-time producer. So.
I'm Seamus Cullinan. I'm a freshman at UIC. I've been investing since the day I turned 18. And this is my first meeting. I'm excited to be here.
My name is Mariko. My background's in medicine. This is all pretty new to me. I wasn't very big picture. So just looking to absorb.
Yeah, Ida, I'm similar. I'm an AI engineer. I have nothing to do with finance, but hopefully I can learn something.
My name is Victor Sanchez, one of the co-founders of the investing group here. Been working in finance for the entirety of my career. Been investing for over a decade now. So just trying to share ideas, find opportunities to make money during this AI secular growth story. So just happy to be here with everybody.
Hey everybody, my name is Quinn Basta. I'm a senior majoring in finance at UIC. I've been investing and trading since I was 18 as well, and truly love this community, talking about all the things in this rapidly evolving market and trying to stay on the cutting edge, especially leveraging AI, learning how to leverage AI to the fullest. I think that is one of the greatest values that I get, but very happy to be here. Looking forward to another great day.
Hi everyone, I'm Anais. I'm an entrepreneur from the city of Chicago, and I also have some past background in economic research. It's been a little bit since I've talked about financial markets, but I'm really excited to be in a room of people who are thinking about them. So.
Hi everybody, I'm Sneha. I'm an MBA student at UIC with a finance concentration, and my family has been running a trading partnership for like the last decade or so. I recently got interested in it and now want to learn how I can contribute more and potentially scale it up. So I'm also here absorbing everything that I can.
Hi, my name is Al. I'm a student at U of I, senior studying statistics. Drove up here today because I think this is super useful, super important. A lot of great ideas in here.
Hey everyone, I'm Jordan. I've been investing since 18, 19 is my best guess. And yeah, I work in finance at Aerial Investments, and yeah, here today to talk some stuff and enjoy talking to everybody else. So,
hi everyone, my name is Mohammed. We're brothers, just in case. I've been a casual investor since 2020, but I got more serious recently with this group and also with the emergence of AI and all that's led to. I'm a USC graduate, graduating in 2024. I am going to Illinois for law school in this fall, so I'm excited about that. But yeah, I enjoy coming here. I enjoy listening to these conversations, having in-person dialogue, which I think is something that's rare in today's world. A little housekeeping for me. So as part of these meetings, we, on top of recording this, which we're doing now, we also take live transcription and make meeting summaries. So I do that through our AI software that we found online. So for everyone at the end of the table, just speak up so the mic can capture you. So at the end, we make a transcript and then we send it out to everyone. So yeah.
Yep. My name is Eric Simpson. I'm a full-time trader and investor. Been doing it for 12 years now, and I live and breathe stocks, like on all time frames. And so I'm gonna try to lead this conversation, but also fill in any gaps if people are kind of like uninformed on certain parts. But then I'll also like let you kind of like cook if you have like a certain domain background knowledge and you want to chime in on a certain section. So some more background at UIC. I co-founded their investing club portfolio management team and helped grow it. And a lot of you have come out of that pipeline over the years. We have at least several hundred alumni. And then Victor, who is also overlapping with me at UIC, later became a president of the portfolio management team. And then Victor was a member of this club, and him and John, who's not here, had the idea, hey, let's start an investing group, got me involved, and then it's like just taking some of the old PMT framework and applying it to this, but with a little more open discussion format, and also using AI for everything. So we're going to be at the forefront of this, and we're just kind of learning as we go. We've only been doing this for several months now, so everything's just kind of a feeling out process, but let's have fun doing it. All right, you guys ready?
Let's do it.
Let's go. All right, so first topic, main topic, Iran. Let's just talk about Iran before we get to the White House thing. So anyone, thoughts on Iran? Or anyone want to be informed on what just happened? Okay, so let's see. More stuff going on with the Strait of Hormuz. Okay, a major UAE port was hit, signaling expansion beyond just naval disruption. Strait remains effectively shut down, or highly restricted, impacting 20% of oil transit, I think, yeah. U.S. is now signaling direct military involvement to keep shipping lanes open. Oil is back over $100 a barrel. I think Victor made the note that how long? 3 months above 100? And then it's like economically horrible?
Yeah, that usually leads to a recession, is
Okay.
what I read.
All right. Didn't Trump say something yesterday or within recent days about like escorting U.S. ships
Yes.
through the Strait? Okay.
There's been a lot of conflicting reports from both sides, from Iran as well as the U.S., on what exactly is happening. I think Iran announced in their state media that they had attacked a U.S. naval ship, but the U.S. denied it. And then I believe it was the United Arab Emirates that stopped some missiles from coming in. Something like that. I think I saw that breaking news today, and I think that's why the market kind of did a 180, kind of right before lunch.
And I heard that like escorting didn't actually mean like physical help. I think it just meant like handing them a map, and that's what I heard. I don't know.
Awesome. All right. He announced a plan.
Sounds that way. Good luck.
Plan called Project Freedom to guide their ships safe out of these restricted waterways. Okay. Focuses on neutral, non-combatant country ships. Okay. He said ships could get on with their business once. Okay. Escorted out. He repeatedly described it as a humanitarian gesture. All right, to help countries not involved in the war. With a very explicit threat attached. He warned any interference would be dealt with forcefully. Okay. Threatened Iran would be blown off the face of the earth. All right, so the usual. All right, so the market has kind of been already pricing this in. As you can see, the S&P 500 has run quite a bit from its late March, early April low point. And so something to realize about the market for those of you who are not as informed or participants in it is that the market tends to be forward looking. It usually tries to price things in advance. I mean, you'll notice this firsthand if you place a bet like in a prediction market, then it kind of approaches the outcome, the probability does over time. So the stock market works in a very similar way. And so it seems like, in the last month, the S&P 500 has already kind of been pricing in the end of the war and sort of the narrative of the war shifting and then AI sort of becoming more of a thing again. And that was another point we made at the meeting, a couple meetings ago maybe, but that so the war and the lasting effects, they might still go on, but the narrative is being pushed. We kind of concluded the narrative was going to be pushed by Trump and his administration because they want to kind of get that, out of the picture by the midterm elections. And also they're trying to bring oil below 100 because if oil stays above 100, right, it's going to be bad. Anyone else with extra thoughts on this? No? Okay. Should we just, because the Iran thing just keeps ongoing. Should we go to the White House Correspondents Dinner shooting? Okay,
Yeah.
let's do that. Just because, that was a big deal, right?
Yeah, I think Iran's just going to be on the agenda.
It'll just
indefinitely.
always be on the agenda, but yeah, there's more
Foreseeable
stuff.
future.
What Wi-Fi are you guys connected to?
The guest one.
Yeah, there's a guest one for the
Yes,
ULCC.
or something.
Okay. Yeah, so I think we all know kind of some guy, broke into the hotel that was hosting the White House Correspondents Dinner, tried to get past security. There's video footage of him like running, and then of course they stopped him. I don't know if did they shoot him? I don't know. But anyway, they kind of stopped him before he could get to the inside and start firing on people or something. So I guess didn't he have a manifesto or something? Yeah.
They called out Trump on 60 Minutes about it.
Okay. Also, no, I think he was like hey guys, Krishilla's here, Ole is here. What's your name? Sorry.
Tommy.
Tommy. Mohed. Okay. And then Vanessa. Okay. We're filling up this room.
Let everyone on the call know that the room is packed.
The room is packed, guys. Look how
Bring in an
popular.
extra seats
Look how
right now.
popular it is right now. This is blowing up. This is blowing up. We're gonna make everyone famous too. That's the new trend. The whole influencer trend. We're all gonna be famous. All right. Do you guys want to? We did the go around the room thing already, but we can start with Vanessa. Do you want to introduce yourself? Just tell us a little bit, your background, and then we'll just go this way.
So I'm a graduating senior at UIC. My name is Vanessa. I'm double majoring in finance and management, and I know this because of PMC.
Hello everyone, my name is Zola Holovatyuk. I am a senior at UIC, study finance and international business. Also found out about this meeting from PMT.
Hi, my name is Tommy. I'm a freshman, sector analyst at PMT, and we are also voted best sector PMT.
My name is Mohit. I'm also a senior. I'm graduating this week. I tagged along with these beautiful people.
Yeah. My name is Krishal. I'm a junior
Just
major
type in
in
Tommy.
finance and economics. I'm just very excited to be here.
Okay. I'll get it from Krish. Okay. You ready? Okay. All right. So, so I think some background. He was some Caltech grad in mechanical engineering. He had worked as a part-time tutor for an SAT prep company or something like that.
Same company I used to work for.
Same company. So
education.
how's the pay for that? How's the pay for that?
I don't think that was the catalyst, but.
Right. So yeah, obviously with these kinds of shooting incidents, people are going to try to politicize it, but honestly, if you try to look at it from a third-party objective perspective, it's usually some kind of mental break and so forth. That's what it always is. It's just a brain chemistry imbalance. But does anyone have thoughts on the shooting itself?
Well, since you mentioned politicizing it, I did think it was interesting that the administration kind of politicized it first, right? Used it as kind of a platform to pitch the ballroom and taxpayer spending on it as a necessity versus,
There was a tweet
originally
storm from a
pitched,
bunch of
yeah.
Twitter accounts kind of at the same time, right? Pushing the whole, the ballroom narrative. Let's see if any stocks reacted to this. I don't think the market really reacted to this
It's kind
much.
of a nothing burger.
It's kind of a nothing
stock.
burger market-wise, yeah.
Yeah.
This is the second, third? There's been how many assassination attempts or sort of planned out?
I believe 3, yeah.
Yeah.
There's Mar-a-Lago.
Yeah.
There's a guy outside Mar-a-Lago.
yeah, what a.
I was walking here and I saw that there was news of the Secret Service having shot some person outside of the White House like 2 hours ago.
Okay, wow.
So that also
sounds like par for the course now.
That sounds like less
yeah.
threat. I don't know what happened exactly, but the Secret Service shot somebody.
Okay, it doesn't really specify anything like specific or like specific stocks. Yeah, I think market-wise it really isn't an issue. So should we move on from this? We have a lot of topics, so we can dive. Yeah. All right. Let me just see what we got next. Okay. Anyone want to talk about this one? Google selling TPUs. Is anyone dialed into the whole AI scaling? Do you want to provide some input on this? Have you been paying attention to this?
I actually am not familiar with this concept, so I don't know that much thing, but like.
That's okay. All right, so we did go through it in one of the earlier meetings, and this is one of the trickiest concepts to get over. But you know, all the LLMs right now that we're using, ChatGPT, Claude, Grok, whatever, so they're trained on these sort of the GPUs or TPUs, depending on what company you're getting it from. We talked about how a lot of the models right now are trained on NVIDIA Hopper chips or Hopper GPUs, and they already came out with the Blackwells, which is like the next gen version. That's like several times stronger than Hopper. The Blackwells have not even really scaled up yet in the models. I think Claude Mythos was like the first thing to really be trained more on the Blackwells, and that hasn't even been released to the public yet because of the whole security issue thing. And that's supposed to be much more powerful. So you think about this scaling curve, it's exponential. And then if you think about, okay, then the next gen after that, Rubin, which was just announced by NVIDIA, that's gonna start scaling next year in 2027. So you think about the AIs, this, like look at this right now. This is the max version of ChatGPT. I also have the max version of Claude going. So what's it gonna be like once those Blackwells scale up and then the Hoppers, right? And then Google has their TPU technology, and I don't know how the scaling curve is for that, but I assume it's probably exponential as well. And I guess apparently they weren't selling those TPUs directly to other customers until now. So that's another sort of like angle for Google as sort of this vertically integrated, doing everything value type play. Does anyone have thoughts on Google in general as a company?
Yeah, I think it's interesting because the other day we hopped on a short call in the war room through the Mag 7 earnings and talked about all that. And Google did come up and we talked about what is Google's pivot as kind of they start to lose money on advertising and people clicking through actual links because Gemini is filtering out all those things for people. So I think this answers the kind of question that we had that night is they're looking for alternative revenue sources by selling, their kind of proprietary items to customers. Seems like a smart move. So I just wanted to tie in the last call that we had between meetings.
I own Google. I think this is just another way to position themselves in terms of different business models. So I like Google a lot because they're not just focusing on one aspect, right? They have full self-driving with what they're doing with Waymo. They obviously now have a hardware component with TPUs. They have Gemini, their own LLM. So to me, it's just diversification. But just real quick, I like this kind of breakdown of kind of explaining the difference between GPUs and TPUs. So GPUs are general purpose parallel processors. TPUs are specialized AI accelerators. So I like it. It says think of the GPU as a highly skilled team of line cooks who can prepare many different dishes. TPU is an industrial robot designed to do one specific task, like flipping a burger at mass scale. So I think if you think of it from the perspective of like LLMs, TPUs are extremely efficient for that, or like math. But if you look at something like self-driving, where the environment's continuously changing and it needs to react and adapt to that, GPUs are still the best kind of chip for those purposes.
Right.
So kind of just to understand the difference.
We can go through this revenue breakdown. This is for 2025, keep in mind, but recent. Okay. Google services, ads, YouTube subscriptions, like from search, still most of their revenue, 85 to 88%, $350 billion. YouTube ads is also a portion of 40 to 60 billion. Okay. YouTube Premium, et cetera, et cetera. How many of you, I'm just curious, who uses YouTube TV? Okay. Wow. Now I'm curious, what does everyone use for their streaming?
I'm noticing that YouTube has been obliterating me with ads lately, like like more and more consistent basis on random videos. I don't know if anybody else has noticed that, but
I'd say their algorithm is getting worse too. The recommendation algorithm, or at least it's not keeping up as well. I watch way too much YouTube. I don't watch TV, but I watch YouTube, and I feel like that recommendation algorithm is just. It's worse than what it used to be, honestly. It just tries to show you the same. If you watch 3 videos from a new channel, it'll just keep showing you that same channel over and over and over again. It doesn't show you anything relevant or interesting.
Potentially too much content on the platform to filter out for their algorithm, maybe.
Over-optimizing, I think, is what they're doing too, in combination with that.
So, Google Cloud, also 70 billion, okay. That's growing the most, 50 to 60% year over year, so that's something to keep an eye on. And that's their main monetization path for AI and TPUs. I've seen you before. What's your name?
Jerry.
Jerry. He's on here. He's on there. Yep, there he is. All right.
Wait, so are TPUs part of that 70 billion?
Yes, I believe so, but let me, okay. Oh, wait. Okay, where they fit today, it says TPUs are not broken out as revenue. Okay, well, yeah, it says in Google Cloud revenue, so yes. But it's not like they don't specifically list exactly for the TPUs. Okay, it does do some estimates. It says TPUs are probably 10 to 20%, 7 to 15 billion. Okay, forward estimates. Realistic ramp, okay, 5 to 15 billion plus, and then longer term it could be a 50 to 100 billion. So this might take a while to scale up revenue-wise relative to their other sort of businesses. Now, I think Google's still a good stock overall. I mean, value metrics seem fine. They're kind of like normal for like these big techs right now that are trying to scale. Obviously, everyone is spending more and more on capex. Didn't they raise their capex estimates? What is it now?
Significantly.
Okay.
I don't know it off the top of my head, but they raised it for the rest of this year as well as 2027.
Okay. Yeah, I think we mentioned that last meeting. Okay. Yeah. Okay, 2026 capex guidance 175 to 190 billion. I mean, that's larger than most companies, most countries combined, maybe. Up massively from anyone. Yeah, this is crazy. Amazon 200 billion now estimated for 2026 in spending. I mean, yeah. So it's a big gamble. It's a big gamble, big bet that they're all making. And I know the market's been a little bit sort of nervous about all this stuff. Like if you look at just the S&P in general, I mean, Google's done relatively better because they're kind of a value stock, but the S&P, a lot of the sort of stagnation from October until here, which is like the Iran war, has been sort of the AI uncertainty. So it's like, again, as I mentioned before, a lot of these companies probably do plenty of internal research and they have lots of smart people. But of course, you're not going to tell the public straight up what your internal research is, but also it's pretty obvious. Okay, so the spending that they're doing may be justified, but we as public market investors, we probably don't know, how that plays out. Like what's the pot of gold at the end of the rainbow? Businesses have to be built on this new AI framework. That's going to take years. Just like in the internet, those websites, everyone knew the internet was going to be big, but those took years to sort of, actually get like an Amazon or a Google to emerge from all that, and they really didn't get their big growth periods until after the dot-com bubble crashed. So again, this is a long-term thing, but the market does recognize AI, but it's also been kind of hesitant in the recent months because of the whole capex spend and just the uncertainty of that.
Well, I'll just add, like this is just the broad S&P 500,
Yeah.
right? So kind of your higher quality mid and large cap companies. But if you were to just extract anything that's kind of related to AI, and if you go to like the year to date
Yeah.
heat map,
Well, I was gonna ask you about should we look at the VanEck ETF or some kind of tech?
yeah, like if you look up like SMH or something, which is a semiconductor ETF, you'll see that anything that's tied to the AI build out, like didn't really dip like during that Iran war related dip that the overall market saw. Like that stayed pretty flat, and now it's up significantly more. But yeah, like you just go year to date, you'll just see it like what's green or what's really green and what
There you
isn't. Obviously excluding energy because that's tied to oil prices, but you can see all your semiconductors and your hardware, your memory, like those things are all up like 50+%, 100%.
Actually, let's go back to like October if we can, or maybe 1 year, or 6 months. I think 6 months is better.
Yeah.
Okay, it's still kind of the same, but like, yeah. So a lot of the software has been murdered because of that whole thing. Like, oh my God, we're going to get replaced by Anthropic, blah blah blah. Who knows? There is actually one thing I wanted to mention with that, but anyway, yeah. So a lot of these sort of components of the GPUs, chips, etc. Those have been running. Lots of semis have been running. Google has been a value stock. Amazon has been a value stock. Tesla's more uncertain because of what they're trying to do with Robo-taxi. Hasn't really scaled much yet. Okay, medical device. Some healthcare has been hit really hard lately. Might go with the software. So yeah, I mean, that's kind of the breakdown. Are there individual ETFs?
SMH is one.
SMH.
That's pretty popular. That's just a broad semiconductor.
Yeah, so it was kind of stagnant for a while. Now it's going gangbusters.
Yeah. you can see like it really didn't dip as much as the broader market did in kind of like February, March, early April.
And the holdings of that, I mean, it's got NVIDIA, Taiwan Semiconductor, Broadcom, Intel, AMD, lots of these sort of semiconductor whatever type stocks. Back. Actually, was Intel? I think Intel was on the.
Yeah, they reported earnings last week, I believe.
Yeah. Actually, no. Let's talk about this. Let's just, since we're on TSMC. Did anyone see the TSMC ASML news? Was it you that sent this?
Yeah.
Okay, Mohammed, do you want to talk about this?
Yeah, so news came out a while ago that TSMC was going to hold off on investing in new ASML machines. Now, that was a significant step back from what the market expected would happen, because as AI development is ramping up, the expectation was that ASML's lithography machines would be in high demand, and the purchases for their next generation machines would be off the box. So I think right now they're the only ones to scale back. I don't know if any more have followed suit, but that caused a little bit of a tumble for ASML's prices. Which also, by the way, for those who don't know, ASML is this like insanely monopoly company, basically. So what they do is they develop lithography machines. That is a critical component in making those AI chips so small. And as of now, it's hard to believe, but they're the only company in the world that can do this. They're mission critical. So if they go away, the entire infrastructure for AI, anything that has anything to do with technology, drops. So now there are some like competitors developing. Peter Thiel's been developing like Substrate, but he's put like maybe 100 and 150 billion, but like in the grand scheme of things, that's like a drop in the ocean compared to what is needed to catch up to ASML. China's doing their own thing, but that's all rumors and innuendos. But that's kind of the rough overview.
Mm-hmm.
Yeah.
Anyone else? Yeah.
Yeah, I looked into this when that news broke, and I I think it's a nothing burger. Like
Yeah.
short term, obviously it's a headwind, but like they didn't cancel these orders; they just delayed them.
Mhm.
So if you look at like ASML, no one else does what they do. They have essentially have a monopoly on like the what's it called? Lithography,
Yeah.
right? Yeah, and relative like or specific to TSMC, like they're essentially saying there's kinks when you bring on a new technology that you have to iron out. They're very costly. So they're like, instead of us doing it, we'll have all the other guys on the street, like an Intel, figure it out first, and then we can get in on the later cycle once those costs come down. Because they really don't need to make that like heavy investment now. That's why it's like a delay and not just a complete cancellation. So that's kind of what I took from it. Like near term headwind, long term probably doesn't really matter. But I'd love to see if it's like someone has like a kind of different view on that. Because the stock has been pretty flat, if not down a little bit since that news broke.
Who holds ASML stock? Any of you others who like hold it want to chime in on your ASML thesis, or if you've seen this news, and if it impacts your thesis?
ASML was presented at PMT as a buy
Yes.
this semester, I suppose, right?
Right.
Last semester? Yeah.
Yeah. And so this news comes in now, and it's that the like TSMC is not using them for a certain generation of their chips. They can do it without them. So it's like, is ASML's monopoly starting to show cracks? You combine that with Peter Thiel's substrate, if that scales up, even though it's a very, very long-term thing, right? So I don't know. I think it's waiting. I think for now they're still kind of raking it in. Although the multiples are getting pretty rich here because it's already been running like crazy since what? I mean, this has been up like 300-something% the last few years, and is at 500 billion for a large cap stock. It's a huge run.
Yeah.
So
personally, I think their machine that they develop is so far ahead in the development. Like it takes so much to enter that even if companies are starting to try to adapt to work without them, I think they're just delaying working with ASML. And if somebody comes into the market, this is not like this is like actual like hands ground machining. So this is stuff that takes much longer to develop and to get out to a scalable level. That maybe in the short term it might drop like 5-10%, but I think in the next year or two we're still pretty safe holding ASML.
Yeah, I would agree. I think my personal thesis is the only thing that would threaten ASML's long-term valuation is if another competitor, an actual competitor, arises. I've heard a few news about like what China's been doing in this market. What they've apparently done is hired a few of ASML's former engineers and design heads. They've apparently been able to sneak into the country a ASML machine as well, and they're looking to reverse engineer it. But again, all these are rumors. Until something actually comes of it, we won't know. But my thesis is until something develops, I think they're okay long term. So yeah.
But even with development in China, we had DeepSeek come out, which was gonna take over ChatGPT and everything. Yeah, all of us talked about it for like 2 weeks, 2 months, and now when was the last time anyone heard DeepSeek? So
that brings a really good idea, actually. I remember when DeepSeek came out, all those stocks dropped, and that was such a clear and beautiful and perfect idea of when to buy a dip or when to at least sell or to do some sort of high leverage thing. I think if there's ever any news that comes out about China having their own TSMC machine, that's probably going to make the market dip a bunch, and that's going to be a very perfect opportunity to buy.
so far nothing. It seems like just some Japanese companies, Nikon and Canon. They still have, they do DUV, deep ultraviolet, not EUV. Okay, so they have a small minority of that market though. So ASML, they control that. So China is, yes, they're doing a Manhattan Project type thing for lithography. Okay, Big Fund 3, a state-backed vehicle worth roughly $47.5 billion, earmarked for semis, has redirected fresh capital towards lithography. EDA's substitutes for ASML and Synopsys tools. I'm digging into that. Okay, Shanghai Microelectronics Equipment. All right, 600 series entered mass production at the 90 nanometer node is now developing a 28 nanometer immersion model. Okay, so in ASML's 28 nanometer is 2 decades old. Okay, SME is 2 decades behind. Okay, Shenzhen Huawei linked SI carrier aggressive newcomer. Yeah, there's been talk about like Huawei since they're so big and well capitalized that they might sort of be the Chinese leader in this whole like semis space. So that's one to keep an eye on. I don't think they trade. Hold on, just this. I don't think they trade on the U.S. exchanges. Private, yeah, private. But definitely something to keep an eye on. By the way, I just switched to Claude because I think it's doing better at the research stuff. So, yeah. Okay, so yeah, something to keep an eye on with that whole thing. Anything else on this topic before we move forward? I think we're good. Okay. What else do we have? Oh yeah. So there's earnings. I mean, we kind of covered a lot of the big techs. Okay, GameStop preparing to make an offer for eBay. Let's dive into this since it's the meme stuff. Everyone can relate to all that stuff. Yeah, I don't know what the deal is here.
Did anyone watch the CNBC interview? CEO?
I didn't see. I just heard about it.
Highly
so.
recommend it.
Yeah.
Hilarious.
Does anyone want to?
That's awesome.
Explain what happened there.
Well, pretty much they were asking the CEO, how do you plan to fund this? The math isn't adding up.
Right.
And he was just stoically responding, half cash, half stock. And the reporter was like, well, that doesn't make sense when eBay's market cap is X. I don't know the numbers off the top of my head, but it's much higher than GameStop. And he's like, I don't understand the question. We can issue shares. And he was just avoiding everything. So it's interesting, but that would scare me if I were an owner of GameStop.
Yeah.
But at the same time, it is kind of a power move on his part.
So let's take a little look at eBay. Okay, eBay is a $48 billion company. All right, they pay a little dividend. They're 24 PE. Okay, so pretty good, like solid value-ish stock. And that ratio's coming down. Does anyone use eBay still? Like that used to be a big. Okay, what do you guys use it for? Yeah.
I think that GameStop wants to become a casino for the new generation of NFTs, which is crazy. I've been getting involved with this thing called Power Packs. Horrible idea to get involved in. It's basically like you go on GameStop's website and you can easily just snap your finger, give them $25. They give you a random odds to get like a Pokemon card or like a baseball card or a basketball card. And there's a giant connection between eBay and GameStop partnership. Easily sell your card through eBay just without even touching the card, ever owning the card. And it is crazy how much money people spend on this to have a technically NFT, but not like a true NFT. Because like back in like 2020 when this thing was exploding with like stuff that you would never touch in your life, like these cards, or you could do it for like Funko Pops. GameStop blows my mind with like collectibles and stuff. All of it, you don't even have to touch it, but you can potentially withdraw it, which then they would ship you the actual physical item. So the physical item exists somewhere that you gambled to get. And usually you lose money, but there's a chance that you make money on this collectible or thing, and then you get money on it. So I think GameStop's very reliant on eBay for its revenue generation at this point. Because eBay has a crazy world of just people trying to beat prices on these Pokemon cards. It's a wild world. I don't get involved with it though. If you're thinking about it, don't look it up. It's a dangerous game.
Anyone else who uses eBay? Yeah.
Yeah, it's a pretty good market for used items. There's a lot of really useful used items, especially tech stuff. This laptop I actually got from there. Bought it for $300 and it has like 32 gigs of RAM, crazy good CPU, a terabyte or NVMe SSD, like really good, right? There's a bunch of stuff. There's a really good marketplace there for used items. and that's what eBay excels in. But they've also, I think they've been innovating a little bit. They've been making their website easier, simpler. They're really there for the customer. This is not a pitch. It sounds like a pitch for eBay, but they really make it super easy to return stuff. I've returned stuff multiple times, and it's no problem at all. And I think that really makes sense with that thing that they're trying to do between what GameStop's. It seems like GameStop had some sort of like consultant have some crazy idea of like how this is going to work, and it honestly doesn't seem that bad. Like if GameStop is going to be trading Pokemon cards virtually, then you need some sort of back end that sort of supports that, and people are already kind of trading Pokemon cards and all these other collectibles on eBay kind of de facto. And if they can integrate that together, that seems like a really good idea. But then a $10 billion company trying to acquire $50 billion, the acquisition would be the other way around.
So let's see, it's an unsolicited $56 billion cash and stock bid. So let's talk about 55.5. Okay. Yeah, Sunday night. Okay, they submitted an unsolicited, non-binding proposal to acquire 100% of eBay. Offers $125 per share, comprising 50% cash, 50% stock, representing a 46% premium to eBay's unaffected closing price. The day GameStop started accumulating its position in eBay, aggregate undiluted equity value is approximately 55.5. Okay. All right, so let's go. Let me just show the.
Did that part say they had commitment from TD for 20 extra billion or something? That's insane.
Yes.
Wow.
The commitment from TD Securities. Okay, that's
$10 million.
Yeah,
more than
so they're able to raise money. That's for sure. The thing is, eBay is here they're a 48 billion market cap. If it's at 125, I mean that's going to take it into the 50 something billion area. GameStop is $10 billion. So what, it's like 1/5 the size of eBay right now.
It's insane that they got a commitment of twice.
For those of you, Brian's here. For those of you who are less informed, like on stocks, really, I mean, yeah, stock price is just whatever. You know, they can always split the shares. What we focus on is market cap, market valuations of the company. That's really your true stock price, or what you want to call it. And so the bizarre thing is that GameStop is making a buyout offer to eBay, except eBay is like 5 times its size. So that's going to mean it's going to require like, you know, a lot of debt, a lot of like infusion of capital from say, TD Securities, like an external source or bank or broker or whoever, and then they might have to issue more shares via like a secondary or some kind of extra deal and dilute and to do it to get the, so I don't know if that might be a big drag on GameStop stock to get this pulled off. It's unusual. Or it could just be a publicity stunt type thing, but it seems like a real offer. Or maybe they just make it an offer that's so insane that like they know it's going to get rejected, but they just wanted to get some headlines. You know, it could be like a publicity play.
You can't hate them for that. I also love going on Facebook Marketplace and lowballing.
Just who knows, right? So maybe they get some hype for whatever it is, and maybe they like release something new to go with their NFT. Business or I don't know, but
I definitely think
they're up to something.
Yeah,
they're up to something.
I think there is some sort of evolution of consumerism happening, kind of like a story that's coming from this in terms of like how physical media is starting to become more of a trend or like nostalgic trend of people wanting to have like wired headphones or people wanting to have all these other physical items maybe from their childhood or for something, and that's why I think eBay is really benefiting from, I guess, but I don't know if anybody else has an opinion on that.
Well, if they're saying half cash and half stock at that price, they know what they're paying total. That they already have a $20 billion commitment. So what? They're going to put up $5 billion in cash and then dilute another $25 billion in stock? Is that what we're looking at here?
Hold on. So we got some breaking news. It says eBay just said it has had no talks with GameStop. So like, I don't know how serious this is. They say, okay.
This is like messaging someone's DMs and saying
Yeah.
we're having a
Yeah.
conversation, but they've never replied.
They will not comment further on GameStop's proposal until their board completes the review. So they will review it, I guess. But yeah, this is totally. I guess to them it's completely out of the blue. Like there's no sort of prior speculation.
Do you think they told TD Ameritrade like, yeah, like we've been in talks, like they're ready?
Well, in the CBC interview, they mentioned that they've never heard like the TD commitment wasn't like a full-on commitment. Like they just said, yeah, sure, if I guess we can put all the other stuff together, why not?
That's owned by Schwab now, right?
Yeah.
I don't know, maybe GameStop's hoping Bitcoin rises exponentially.
Well, I was about to ask that. Did they give up on being a like Bitcoin treasury?
No, I think they still hold quite a
Are they
bit
still
of
doing
Bitcoin.
that?
Schwab owns TD Ameritrade.
Yes.
TD is still its own company.
Yeah. And Schwab is 159 billion market cap, trading at. I mean, it's a cash cow. So compared to something like Robinhood, you know, it's making a lot more money. Diana's here. But again, some of us that use Schwab, I'm not a huge fan. Probably gonna switch. But so they seem, yeah, they're well capitalized. They can give the 20 billion. The question is, yeah, for GameStop, like they could probably do it, yes, but something's got to give if you're, you know. So you're going to borrow, you're going to issue more stock. Either way, I mean, that's going to be a drag on the stock. It's going to be a drag on the stock, you know, whether it's through dilution or whether it's the company taking on more debt, and having to deal with the cost, et cetera. So for GameStop, that's a drag on the stock just in terms of the mechanics of it. But then it's like, what would maybe there's a long-term value add play here, you know. Maybe Ryan Cohen wants to do like an AI play, you know, just like Allbirds, right? No, I'm just kidding. Yeah, that was some crazy news last week. So, all right. Anyone else have thoughts on this?
I think it's publicity stunt.
Yeah.
I agree.
Yeah. So, little fishy. We'll see what they have up their sleeve. Ryan Cohen is known for like memeing a lot on Twitter. You know, he's the one who's like, he'll post like an emoji, and then GameStop stock will move like 20% in response to it. Like,
you can see it in the
who
charts.
knows? Yeah. Okay, so let's go to the Fed rates, since I'm sure some of you do have thoughts on this. So they held rates steady, but the unusual thing was that it was like an 8-4 decision, and that's never happened before, that you have that much dissent within the Fed board.
It's the first time since 1992.
Right. Now is just like posturing, since some of these people will be Powell's leaving. It's like, what was the thing about Powell leaving and coming back? I don't know, but he was on his way out.
He's staying on as governor,
on the
right?
board, but he's stepping down as chair.
Okay.
Yeah.
So his influence, who knows? Yeah. So one person, Stephen Myron, he preferred to, he's been kind of Trump's guy, so he's been all about like, let's lower the rates as much and as fast as possible. I don't know if that's really healthy for the economy, but he's gonna, push for that. So he voted to reduce by 1/4 a percentage point. Everyone else, or the other three who dissented, they supported maintaining the target range, but did not support inclusion of an easing bias in the statement. Okay, so they're just kind of like it's a nothing, neutral. Okay. All right. So the market had already kind of been running back, like from the Iran narrative, but I guess it gave it some extra. Maybe it's just holding it up more or something. So anyone else have thoughts on this, or just more wait and see?
I think the bigger Fed news was just Kevin Warsh is like getting confirmed as the new Fed chair.
Yeah.
But when did that happen?
Well, it's basically going to happen, because I think that the few Democrats that were kind of like saying they were going to work to block it have agreed to vote in favor of. So they should have the majority that they need. And that was a result of them dropping that kind of bogus investigation into Powell.
Did they drop the investigation into the other board member?
No, Governor Cook? No.
No, just Powell's. I think it's an interesting environment, Launcher. We spoke about this last Wednesday during that like impromptu call we had, but Kevin Warsh is kind of playing off of like Greenspan's playbook from the 90s, which a lot of people argue was like a catalyst for the tech bubble. But essentially, it's like you can have high growth and low inflation at the same time through two policies, which is dovish on rates, right? So low interest rates to stimulate growth, but then being hawkish on the balance sheet. It's kind of like a fine line you have to teeter from what I've read. And if it works out, his whole reason for saying that you can have low rates, high growth, low inflation is because AI will be deflationary in nature, so it'll allow that to just be the perfect storm for it. So that's like the big if there. If AI does turn out to be deflationary, it could be one of the greatest economic booms we've ever had in the history of the United States. But if that doesn't, end up being the case, there's like a severe risk of like a really bad economic outcome. So that's kind of from what I've read on his philosophy, like what to expect.
I'm just curious because you said he's like Greenspan, right? So Greenspan, Greenspan was, I think he was the one during Bill Clinton, right? I think. Okay, so he
might be the longest tenured Fed chair of all
or
time.
was he like nominated by Bush? Either way.
I think Bush Senior.
I think something, I'm not sure on this, so, but like the dot-com bubble in the 1990s and so forth, I mean, it was also one of those things where it was fueled by a low interest rate environment, I think, right? And then of course, in March 2000, when things came crashing down, it's because they raised rates, they finally raised rates. So the cost to borrow money for your business or whatever it is, or your operation is, it's higher. Okay. Oh, in August 1987.
Yeah, he
that
went
was
through
under
three
Reagan.
So
Okay.
yeah, 3 or 4 presidents, I think, that he went through.
Okay. Yeah. So in '96. Okay. So again, it was a different environment back then. I mean, some people might remember, but like, people had CDs a lot. They had CDs because interest rates were high. And so in the 1990s, but not like they were in the 80s. Okay, the Fed model said unemployment below 6% would cause inflation to accelerate. Okay, unemployment was falling fast, 5.6 in 95, 5.4. Okay, Greenspan disagreed. He looked at the data, concluded that the information technology investment was producing a structural productivity boom, that workers were getting more productive faster than wages were rising, which meant unit labor costs weren't generating pressure. Okay. He said the Fed should let the economy run hot, not preemptively kill the expansion. He was right. Productivity growth, which had averaged minus 1.5% in the 70s and 80s, accelerated to 2.5 to 3% in the late 1990s. Inflation stayed subdued, even as unemployment dropped to 4%. So this was the Goldilocks economy. That's the genesis of the bubble. By identifying the productivity boom, and refusing to tighten, he created the conditions for an unprecedented equity bubble, loose policy, real productivity gains, rising profits, falling inflation, perfect setup for multiple expansion in tech stocks. Okay.
It's interesting though, it says loose policy, but I mean, I think in 1990 they had rates at 5.5.
Right, so
is there a different
relative
definition of loose relative to the...
Yeah, so it was just a much different environment 30 years ago. Like I said, a lot of people's families had CDs. Like I think my parents even made CDs for me when I was like a baby or something. I was like expected to just like be a great investment or something. Obviously it's a different situation ever since the financial crisis, and they had to take rates down to like near zero. And now coming back up in 22 from that 2022, and then finally they're trying to get it down to about 2%. It's what, 4.5 to 4.75 right now, something like that. So it's hard to compare. I mean, we can go through.
that Goldilocks situation, like it mentioned, is basically what Warsh is betting on. And I think the biggest thing I forgot to mention is that historically, like if you look at like Powell, right, he was a very reactive Fed chair. They look at the data and then they make a decision.
Yeah.
Whereas Warsh is going to be more of like, what do we expect is going to happen? Let's get in front of it and make decisions off what we think is going to happen, you know, as opposed to being reactionary. So more proactive.
How do you think if oil doesn't get below 100 a barrel, how do you think that's going to impact his plan? Let's say he does get into a position and he does enact his plan.
I don't know. I'm not smart enough on economics to have a prediction on that. But I would think that if oil stays high too long and we go into a recession, that's his easiest catalyst to justify lowering rates probably.
Not always.
Not always?
No.
Never mind, I don't know what I'm talking about.
So, okay, so
be more inclined to print at that point and lower the rates.
Did you want to? Okay. So going to this chart, the federal funds rate going back to 1955, you can see, I mean, the environments are just different each time, you know, between, these are like, what? These are recessions, right? They define these as recessions, as gray areas. I mean, it's like a different sort of, it's like, okay, in the 1990s, it was around 5-ish something percent, right? And then, yeah, it just became a lower rate environment, you know, going into the housing crisis and then down to like 0. So over since 1980, since that whole Volcker, whatever it is, and after the oil stuff, like it's just been going down over time. And so like that, yeah, that raised just to try to overcompensate a little bit because it had been kept down for so long to near 0 because of the financial crisis. And now we're just trying to normalize back to about maybe historically, okay, a reasonable level, like 2-3%. I mean, it's dependent on a lot of factors. I'll say this, the market now is much different than it was 40, 50 years ago. Like you cannot use the same like factors or indicators or something to sort of gauge the market. I think a lot of people make that mistake and use like 1970s, 1980s type indicators, and it's just look, it's big tech weighted now. It's more big tech weighted than it has ever been. Back then it was more like, you know, utilities or retail or something. You know, it's just completely different. So when you're trying to sort of forecast the market based on all this stuff, keep in mind that, like the factor weightings and how things are reactive to it, and it's just different. So again, these regime change, like the times, they're relatively different, but it seems like in our sort of zone, getting to 2-ish%, like their target's probably what we need to do. I mean, I'm not an economics expert person, but that's just from what I hear chatter-wise. Anything else on this? Okay. Let's go to Live Golf.
Do you want to add something?
I'm just curious, like, I mean, this is a room of investors, so like, how do people feel about investing with maybe rising inflation? I mean, probably rising inflation, especially with like the increase in investment in AI, and then also on top of a oil conundrum. Like, I mean, I don't know what markets are necessarily predicting for inflation, but I feel like investors, especially in like the 1990s, were like really concerned about investing under inflation. So like, do you guys care that it might be in a higher inflationary environment when you guys are investing in your portfolios, or is that not a consideration for this group?
Really depends. I think it was a big deal maybe in 2022, 23, when the market was like sort of forecasting that to kind of be a thing. And then we saw companies sort of slide in advance of that. So there's a big consumer slide in all the consumer stocks, you know. You could go to a grocery store and the price of like whatever, all the items was much higher. But now it seems like, I mean, the consumer stuff and everything related to that has already sort of had its crash. I don't know, they haven't really recovered. Like, it's been rough, especially for restaurants, but I think it's kind of like getting past that. So we are in a high inflation environment, but it's like, again, the market is forward looking. So it's gonna start pricing those things well in advance. So like in 2022, we started crashing on like the first hint of like more inflation going up. But yeah.
Well, wasn't it? Yeah. And when you say crashing, you mean the stock prices?
Yeah, the overall market just declined.
And-
So 2022
and do you
was a
think-
rough year. Yeah.
Do you see the stock market not pricing in higher inflation? Is the stock market pricing in lower inflation?
I think
right
it's
now?
already, yeah, I think it's, if anything, it's probably pricing in lower inflation going forward. You think about the AI wave, and tech is deflationary, you know, because it makes things more efficient. And so, and this, they talk about this, I recommend Common Stocks and Uncommon Profits by Philip Fisher. It's a good book about that. But, and that was from the 1950s. But, so it's, going forward, I think we're moving past that. Now, we're still dealing with it, but, you know, the market tries to jump ahead of these things. All right.
I'll just add, I think the market will always react, you know, to what they believe is going to go on with inflation and how that's going to change interest rates. But I think right now the market's in a place where it needs to see that reflected in earnings, as opposed to kind of jumping the gun and saying inflation's going to go up because oil's higher, and you know that's going to be inherently bad for the market. And I think a big reason for that is just that over the past like decade, call it 20 years, like the stock market isn't a good reflection of the health of the U.S. economy anymore, right? You can see that with the concentration. You had like 10 stocks drive, you know, 80% of the returns in like 2024 and 2025, and so there's a small pool of winners that aren't reliant on consumer strength or consumer spending. And then you have an even larger pool of stocks that, you know, as long as these hyperscalers keep spending and the top 5 or 10% of wealthiest consumers keep spending, you know, it can prop up a lot of like what makes up, you know, most of these like stock indices. So I fully bought into that philosophy where, you know, I think if we enter a recession, I think it'll be bad for the American people and the consumers, but these big tech companies, like, there's nothing that's really going to slow them down. It would almost be more of a catalyst for them, because if interest rates come down and lending gets cheaper, they can fuel more of their capex spend at an even lower cost. So there is like a dislocation, I think, between the two.
All right. Moving on. Okay. So let's talk about just another sort of non-macro thing. Live Golf and the Saudi fund. So Saudi Arabia Public Investment Fund said Thursday it will no longer fund Live Golf beyond the 26th season. Okay, so the substantial investment required by Live Golf over long term is no longer consistent with their investment strategy. Note the chairman of the PIF, their public investment fund, who helped launch Live, along with Greg Norman, famous golfer, will step down from his role with the league. Okay, so it's kind of like going with that. So maybe it's his baby. So that fund had invested over $5 billion into Live since the league was announced in 2021. I don't know if you guys know, I'm not a golf person, but some of you are. But like when Live was announced, they were just throwing crazy money at some of these golfers, you know, and they were jumping ship from the PGA or whatever it was. And then I think, yeah, did they merge back with the PGA, or what's going on with that? Who knows?
So there's a path back for the players. Brooks Koepka is on it right now. If you guys know who Brooks Koepka is, essentially, if you've won a major within the last like 5 years, which is the rule that gets you into stuff like the Masters, then you have to pay like a charitable donation, and then you play as an alternate for like the whole next season. So if you tune into like a random golf event right now, you'll see Brooks Koepka, who's a world-class golfer, just sitting on a lawn chair waiting for someone to not show up so that he can play in the event. The second alternative is what Patrick Reed is on. He has not won a major in the last 5 years. He essentially has to serve a full year suspension, still do the charitable donation, and then he'll be like brought back into the PGA Tour. But these are high profile players. A lot of the players on Live are not high profile players. The remaining ones that are would be like Phil Mickelson, Brian DeChambeau, John Rahm, maybe Sergio Garcia. But all of them have not spoken out against Live quite yet.
Okay. Vlad says, Sorry.
Sorry to interrupt. Has anybody like ever watched a live golf event, like streamed it or figured out how to watch it?
Yes.
You have? Okay. Never understood.
For lack of a better word, it's ass. Yeah, it's very terrible. Before they had to deal with, I think, Fox Sports now, you had to like download an app, and it was bad. It would work on YouTube, but that was also bad. It's much more fun in person.
Yeah. It's like the number one thing that a league can generate revenue from is
Yeah.
TV streaming rights, and they do a horrible job saying how you can watch it.
I don't even know what their ad revenue is, but I'm sure it's not even worth it for Fox or whatever they paid.
So actually, I said this wasn't it could be a macro thing because you have the whole war, Strait of Hormuz, that closure, Saudi exports. Okay, they fell because of that. So there's a document from the Public Investment Fund released for their 2026 to 2030 strategy, and yeah, it cuts their capital expenditure by 15%, suspends the line, elevates an artificial. Okay, so there's just some cuts they've made or something. It's not a crisis, okay, blah blah blah, but it's something. So maybe this comes in reaction to that because they have burned $5 billion, so it's a little bit. I mean, still kind of a drop in the bucket for this fund, but who knows if this main guy's leaving, someone else is coming in. Maybe they're not as big a fan of Live. And then it's like, okay, we have these macro things that are forcing us to make cuts. Well, let's just get rid of Live. Could be something like that.
Can you check what like the PIF's primary holdings are, primary investments are?
Yeah.
Breakdown.
While you did that too, was the sovereign wealth fund the one building the wall, like that commune or whatever in the middle of the desert? Were they the ones funding that? No. Wait, was that? Okay, because that also shut down this year, right?
Really?
Something like that. So they have the whole Mission 2030 thing when Saudi launched it with the new Crown Prince. But now what really has happened is some of those events or like some of those things that they're trying to create, it's not possible for them to make it. They're trying to create this alternative to like the UAE and the Dubai thing.
Yeah.
So it just hasn't worked out. So now they're just like configuring what to do with the capital that they have.
Gotcha.
Okay, so the breakdown of the holdings: 940 billion in assets under management. 50 to 55% is actually domestic Saudi holdings, like Aramco. That's their oil thing. Okay, they have strategic giga projects. Okay, Red Sea. I don't know what these are. Do you know what these are, Krisho?
So the Neon comes under the whole line. Yeah, the 1 mile line they were trying to build in the desert. And then Red Sea and all those, there were like a couple of like hotel developments and stuff like that.
Gotcha.
They're trying to make like a ski resort in the middle of the desert. Hotel inside a mountain. So just like these.
That's a lot of fake snow. Yeah.
That they were trying to do.
So they're just like throwing darts.
Yeah.
$5 billion is absolutely nothing.
Yeah.
To them.
Okay, so yeah, Live is still just tiny for this, but maybe there's some political maneuvering within the Saudis, who are running this. All right. Anyone else have thoughts on Live? Okay. What else do we have on the list? Unless someone wants to like really talk about something. SpaceX and Cursor. Let's talk about this one. I do want to get to other stuff. So SpaceX made an announcement that I guess it was a deal with Cursor to either buy them out completely or to pay them for like work done by the end of 2026. Let me just double check with Claude. Okay, Cursor has given SpaceX the right to acquire Cursor for $60 billion or pay $10 billion for our work together. I think Cursor is still private. I think so. Yeah.
What does $10 billion for our work together like mean exactly?
Those secretive XAI SpaceX stuff.
Does that mean like they just want to tell Cursor like, hey, like this is all the stuff that we've done together so far, we're gonna pay you to not like do anything with it, we're gonna take it. Is that what they're saying?
Probably.
Well, does anyone know why, like, what the catalyst for Cursor wanting to make this deal with SpaceX is?
First of all, who uses Cursor here? Can someone explain? Do you want to explain? And then
I
we'll
mean,
go.
like, I'm using it as a like coding tool. It's like VS Code.
Yeah, a lot of people code with it, right?
Yeah.
Okay.
But like, based on my experience, I don't think it can replace VS Code.
Really. I think, from what I understand, I think Cursor, their engineering, their value that they add is that they're really good at engineering like the way that the LLM talks to you and the way that they're like a step in between the actual thinking LLM brain and then your input, and they do that better than anybody else. They have agent harnesses for each different agent that they do better than the companies themselves that create the agents. And that's just kind of, and they do presumably other things around that, but I'd say that Cursor's the best for coding because especially when the models come out, you can just use them on Cursor pretty quickly right after too. But they have the better infrastructure, the software infrastructure around using it. But it is just a coding tool, and I'd say maybe it's marginal gains.
What model is that? Is it the best?
No, like what I'm thinking, like you can do the exact same thing with VS Code.
Yeah, I completely for like 99% of use cases. I think
UX is completely the same.
Hmm.
There's nothing different. So I felt like they just copied and pasted. And like when they introduced this product, there's nothing like that. Or right now with VS Code, you can do whatever you want. Like any model, cloud, like all the cloud models and everything, like you can embed it into the VS Code.
Mm-hmm. But I'd say we could use the case of number one, they're already offering 60 billion, so clearly they understand that there's something there. There's something that they do that's really valuable. And another thing is I'd like to present the case of Perplexity. It was kind of the same thing. It came out right when AI came out, and Perplexity was just like, oh, we have these models and they can only use scholarly sources. And Cursor is like, okay, we have these models, we're going to let you use all of them at the same time in one editor instead of just one at a time. And Perplexity is not doing too well, but Cursor is. So clearly the thing that they're doing is there's something to it that's has genuine value. And just from my own personal experience, yeah, Cursor is better, but it's just like slightly better. It's just easier to use for some models, and I mean that's going to shift as the models come and go. But there's something there that Cursor has, and I think it's that engineering the harnesses, and I think that SpaceX, I think Eric can talk about this a lot too. They have some sort of larger vision for what they want their company to be, and I think that Cursor slots into that pretty well. They must see something there because if they're offering 60 billion, like
I just want to add one thing from Al's. I think you had a great point there. Brock has been sucking into coding. Everyone else has been really great with Anthropic, and all the other companies have been really great with coding. With the SpaceX and Rock has been sucking, so I think that's one of the reasons why they bought or try to work with Cursor. And also the SpaceX has really good compute. So if they add this Cursor and this combine it together, they'll be able to build a really nice agent in the future. Maybe not just an agent, maybe with Tesla's vision of the robots and all that stuff going on. I think this is a really nice move by Elon, and great to look forward to.
And it works well with the data centers and AI in space.
Yeah.
Although they said that's probably never going to be a real thing.
Well, I think in 10
Their
years.
disclosures
Like
for their IPO.
Oh really?
Yeah, they said that they said that they understand that there's a chance that never actually happens.
Oh. Hmm.
Alright, so just for some background, since most of us don't use Cursor and need to understand it better, like she's talking about, so Microsoft Visual Studio Code is the most popular code, and Cursor is a code editor, and yeah, software engineers, yeah, they're all using it. It's the new popular thing now. Okay, so it's based on the VS Code. Okay, open it, you see this, okay, blah, blah, blah. AI is a native part of them instead of a full time. Okay. Predicts what you're going to write next, shows it as ghost tech. Okay, so they just have these interesting, like, highlight, it makes coding much easier, I guess. Okay. Yeah, so you can just vibe code everything with Cursor. Okay. Okay, enterprises pay for it. Okay, because it increases productivity. Benchmarks internally at companies like Stripe, Shopify, Adobe are showing 30 to 50% productivity improvements on certain task categories. Okay, that's pretty significant. Yeah. I mean, you think about their valuations and how that affects productivity and then the value of an employee and what they can output. That's big. All right. So they aren't married to one AI provider. The user picks. Okay. If Anthropic releases a better model, Cursor users get it immediately. Okay. Interesting. If OpenAI's GPT-5 is better at Python, you can route Python tasks to it. Cursor's the interface, underlying intelligence, swappable. Yeah, did someone want to say anything?
No, I just said huh. I didn't really
Okay.
understand what this was until I read that they're like the interface.
Yeah. This is interesting. Okay. And SpaceX seems to recognize the
I
value.
think what I want to know though is how does Cursor benefit and how does SpaceX benefit? Like, what are the reasons to wanting to merge or get acquired? Because I had someone pose the idea to me that he thought that maybe it was because of compute, where they just don't have enough money to spend on like more chips. So it's like you almost just have to get acquired because you need somebody who's got a bigger pocketbook to get that for you. And I don't know if that makes sense. But I know like a lot of the other LLMs have kind of been facing issues where it's like you're trying to ask it something and it's like giving you a shorter response or it's like, limiting you. So I don't know if that's a reason that some of these smaller, AI companies would want to almost get acquired so that they can scale faster.
You know what's interesting? Cursor, okay, so yeah, because they have that whole Colossus cluster in Tennessee, right? SpaceX, XAI does, SpaceX does now. So yeah, 550,000 H100, that's Hopper GPUs, scaling to 1 million, okay. So Cursor can train its own proprietary composer model, that's like their new release thing, at scales they couldn't afford otherwise, so that they get valuable data now. Yeah, so now they get valuable data and information to improve their stuff. Okay. Model provider that isn't a competitor. Yeah. Okay. Yes. Okay. 10 billion of guaranteed cash. I mean, if you're a startup company and you're private, 10 billion in cash. I mean, especially for the valuation SpaceX was offering was 60 billion, but like that's a good earnings windfall right there, for a private startup company. Most of them are just negative in everything for years, so that's huge if they get that 10 billion payout. Like either way, that's a win-win for a company like Cursor. You can train your data, you can get paid big bucks, or you just get bought out for like a premium, whatever. So now for SpaceX, at their size, I guess they can do it. Although the recent, the S1 came out and they're kind of like priced at like a Palantir valuation. So they're really so it's just another risk for SpaceX. Although compared to their valuation, it's kind of a drop in the bucket. But for Cursor, I mean, this is a big deal. Except Cursor is not public. But if you're a private market investor, it's significant. Anyone else have thoughts on this? Okay. I did want to, before we get into any of these, or if someone wants to bring something up, should we talk about Avis car? Okay, but anyway, so I'll just put that on the, okay, anyway, I just wanted to mention Adobe. I met with John and then his neighbors and Matthew, Audra. I got them signed up. They're going to come to some meeting sometime. But Matthew is like a documentary filmmaker. He says he uses Adobe like their sort of software for like it's really good for creators, and that a lot of the tools are not like it's like these new things have come out like Figma and Canva, or I don't know what they are exactly because I'm not an expert in that. But a lot of these things, I guess, that he's using with Adobe are not really replaceable, in his opinion. So the whole software slide based on, it's like thinking Adobe's dead from all this. It's kind of like not warranted. And Adobe, if you think about it, is a cash cow. I mean, look at this. Price of free cash flow, sub 10, PE 14, whatever. That's not too bad relative to their, where they're at. I mean, they're being priced like, this is like a potential turnaround, value bounce, cash cow stock for the next few years, I think, because they're not going to die anytime soon. Anyone have thoughts on Adobe or uses Adobe?
I have used Adobe for a lot, especially anything to do with photography, editing, stuff like that. It's just like the depth that Adobe gives you, especially when you learn it, it's just incomparable to anything else out there in the market. You cannot do it in Figma, you cannot do it in Canva or any other application that you do. There's a lot of different knockoffs that try to mimic somewhat some part of some of the services that Adobe offers, but it's just like it's not even close. And if you're trying to just like do it once for a single project, okay, you might be able to pass it off by going through like 8 different sources. But if you're trying to actually do anything with Adobe, like it's just irreplaceable.
Hmm. So are you, sorry, did you say you're holding the stock?
I didn't say I'm holding stock.
Okay.
It's been going down. I don't want to hold it, but what they offer is great.
Yeah.
I just want to add on just one thing. I was listening to the podcast with Jensen Huang, and I completely agree that all of the software stocks has been coming down a lot. I've been adding on to software stocks personally a lot, not in Adobe, but I think right here for the execution of Adobe is so important because some of these can be easily replaced by AIs if they don't execute the AIs in their part. Jensen Huang has said personally that we're not going to make the robots make the branches or the tools so that we can, they can make it realistically if they want to, but we're not going to make them do it. And these software are going to be like the tools that the agents can use in the future, but the important is how will these agents, how will these software companies actually adapt to it so that the agents can use it really easily. And I think that's a really important part for the execution for all the software companies, but I think most of these software companies will fail.
That makes
Except the big ones.
That makes you think of a good question for everybody. Raise your hand if you think that the AIs are going to replace all the software companies, or that they're going to make them go down. Go down. I should say go down. Raise your hand high up if you think they're going to go down because of this.
Go down.
No. Okay.
Who's strongly like 100% all of them? You think, okay.
I'm pretty close to be there.
Who thinks that AI is going to directly kill some very large companies that do primarily just software?
So you guys think that Microsoft will die because of their
I want to hear. Hold on. I want to hear from Iram. Yeah, your thought, because you're very hardline, like 100%.
Yeah, again, like I don't have any like finance background, so it's just like based on experience. Yeah, because like software engineering, like coding, that's like very structured things, right? Like there are rules, and like it's like learning a new language, but language is the same. So technically, nothing is changing. So if there's no change, and it's gonna be like way more easier for AI to understand and learn and then make it better. Even if they introduce like agents and stuff like that, you can create your agent right now, and like you can use Adobe, like whatever you are doing, and like you can make them do everything that you are doing with your own agents. So you don't actually like need them to create an agent for you.
Yeah, that's exactly what I'm saying. I believe a lot of these enterprises will adapt with the current softwares like Microsoft. And JP Morgan Chase, they just announced Microsoft Copilot today. And let me tell you, I think like a lot of these software companies who's going to adapt to AI really well will survive. But those who don't survive will be the ones who don't adapt to AI really well.
For Microsoft case, like again, like for Cursor, I think why I didn't like Cursor, like in the beginning, they brought this idea, like coding and AI, like they made this invention, but like the Microsoft is holding everything. So like companies, like Microsoft, like without Microsoft, they can survive. So like since they don't adopt Cursor, then we couldn't use it. And in the meantime, Microsoft like noticed that, and they also like introduced like all these features to the VS Code, and like they made a big one.
So I think the point, going back to Brian, so basically you're emphasizing the whole enterprise sales aspect. I mean, that is, so this is an interesting thing because
that's the strategy part of it, right?
yeah, so it's like, the thing about enterprise sales, like they can you know, if you get boots on the ground, you get people just like going around and it's still a people game, and then being like, hey, your company needs this, blah 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 blah. They push it, and then they have like tactics for like ecosystem lock-in. It can still sort of like, you know, okay, now you've locked in revenues for X number of years, even if your thing probably down the line gets disrupted by like AI or something, but there's still cards they can play. Victor.
I'm very bearish on software, so I'll preface
Yes.
my comments with that. And if I go into a rant, just stop me.
Okay.
But at work, we use Salesforce, and there's zero AI integration right now for us. With the expectation that by October, they'll have a presentation ready on what kind of different capabilities they can integrate into our CRM to make like the sales guys' lives easier. And I'm like, October? October's like forever from now. It's crazy. That's like an insane amount of time. So I like the reason I'm like so bearish, even on some of these big, you know, I guess they're not mega caps, but big large cap software companies, is I don't feel like they were on the cutting edge of technology. They weren't ready for the shift, right? And the ones that can pivot quickly and adapt and implement, you know, those will be fine. And the ones that can't are obviously going to fail. But there's already a lag, and a lag in technology to me is like a death sentence, or at least a slow dive to the bottom, you know, as your margins start to compress because you have to bring down pricing because you're not providing as good of a service. And so my argument when people are like, oh, well, software is so cheap, like, why don't I just buy a bunch of software names because they're going to rebound? I'm like, buy hardware, buy semis. The risk with software is execution. It's like buying a company that doesn't, it's like buying a pre-revenue company.
Yeah.
It's all execution. Like, will they pull off the shift? To me, I don't like that risk. I'll take valuation risk all day because I can watch earnings to understand when multiples are going to start to compress, right? And I can understand like, oh man, maybe the semis are overbought. Maybe this is the end of the capex cycle. Like, there will be clear exit signs along the way for that. But to me, you're driving blind if you're trying to identify who the software winners and losers are. And Microsoft probably going to be fine. I mean, they're a very well-established, diversified kind of lines of business, you know, company. But I think a lot of these guys are, you know, SOL.
All right.
The reason why I asked that question real quick as well about Adobe, if you pulled the chart back up.
Yes.
I'm wondering like whether that slow drop down is because of like smart money seeing what AI is going to do to software and adjusting to it accordingly, or is it like people that don't fully understand how it's going to integrate and just hear AI is going to wipe it out and then causing that to go down? Like, is it naive downward trend, or is it smart? Because if it's naive, then it's going to bounce back up. And that's kind of why I asked that question, like, how many people don't really know exactly how AI works and how it gets integrated, but are putting their money on the line, or rather pulling out of Adobe? That's kind of why I was asking that. That wasn't a question, I was just saying it out loud to hear what other people may have to think.
I think it's a mix of both. You know how Claude came out with that COBOL coding thing? That IBM is like if you look up COBOL code IBM, that's a legacy software that only IBM did, and they had to hire engineers from IBM for like 6 months and a year to go through the COBOL files. Right? And Claude came out and said, we can do it in a quarter. IBM lost what, 11%, 13% of the stock value that day? So I think it's a mix of both. It's also a marketing gimmick. Claude also comes out with great marketing strategies. They give out like, oh yeah, we're gonna take all the jobs, and then the models are not that great.
I just want to add on like what Victor said before. Sorry for talking too much here, but you know, I think most of the software companies will fail. But what's really people are missing out is that this software company has been existing for tens of years, has gathered so much data that they can use that data to actually continue to operate forward. I think what's really important, like what Al said here, is that I forgot your question, but I think it's important that these Microsoft or these software companies continue to use their data to move forward. Oh, I mean, yeah, I just remember Adobe. Just
going over the revenue of Adobe. They've been operating like their revenues has been continuing to increase. Like what Victor said, the execution is important. There.
Alright. Maybe that might be the case then. Maybe it's a mix of both of the smart money and the naive money making it go down, and it's just going to be a tell of whether these companies can properly integrate or not. And it's just kind of like right now it's kind of like a mixed bag, who's going to actually integrate, who's not. And the market is pricing that in, and then we'll see what happens. Maybe it'll be good to look at a basket of companies and see, like, look exactly which ones are actually trying to innovate and apply it, and exactly trying to understand if that application is real or if it's just, oh, we made all of our employees start using Gmail with the AI thing that they have, if they're going to have it. Or if it's like actually like we brought in a team of consultants that know what they're doing and they're implementing it properly.
Yeah, and that's an interesting point because, like, I know that Adobe, one of the big complaints on the consumer side is like their TOS. They are like harboring a bunch of data. So does a company like Adobe even know what they're sitting on in terms of like the end of the rainbow? Because I mean, we're already seeing Hollywood, like even Hollywood move to like AI generated content. So are they going to be able to just pull the hive mind of creatives that have been using their products forever to expedite that?
Right.
And that's their new revenue stream.
I will say it was Creative Cloud. That's what Matthew, the filmmaker, uses. I think that's $13 billion. So revenue. I mean, what? This is $102 billion company. Okay, so it's like half their sales, just over half their sales. So it is a significant portion. Yeah, I don't know how much more the stock will fall. It seems like a lot of people still use that. So there's definitely probably value in it.
Creative Cloud was the pivot to SaaS.
Yeah.
So they offered their everything for one price.
Interesting. Yeah. So, and do you use Adobe stuff?
I've had it on and off over the years.
Okay.
Yeah.
What's your like pros and cons or whatever for it?
They definitely have a corner they've cornered the market. There's not a lot of competition.
Right.
Especially in terms of like the professional grade stuff, with Final Cut Pro being the alternative. But the pipeline that Adobe has between all of their softwares being integrated and being able to jump between them all is like, you can't compare it to anything.
Right.
So could you say that, a reason for the stock falling is not because, Adobe's going to go away, but new entrants? It makes it easier for new entrants to come in and deliver a similar product?
Yeah, I would say that's the fear. Can someone hop on Claude Code or something and build a new, better version or a cheaper version?
Which is why you buy hardware, not software. I just have one more thing I want to say on that. One more thing. Alright, because like you look at memory's trading at these crazy valuations, and everyone's like, well, they can't trade that high. Like it's memory. At some point, the memory shortage is going to end, but they're not building new capacity, and there's no new entrants that can really enter. Like no one can come in and do what an SK Hynix or Micron does. You can't just start up that business overnight. It's too cost intensive to build that up. So if they're not building more capacity, the shortage can go on for years before that normalizes. But something like software, where it's very asset light, you can start up a new software company to compete with Adobe and leverage AI to be a meaningful competitor in that space. So just another point of why I'm very bearish on software.
But in Adobe's case, to continue this a little bit, like before AI, people were already doing that. They're already competing for Adobe space, and Adobe has proven that they were able to beat them out. So maybe even if it's easier to make it, Adobe is prepared for that. Maybe it's a little bit easier to enter, but Adobe knows that, has been in that field for a little bit. Think of how many open source or how many alternative softwares there are to what Adobe does, but they're still somehow $100 billion market cap company. So maybe they're a little bit more prepared for that, and they have tons of cash as well, and they do have AI integrations. They have it specifically in Photoshop. I've seen people use it. They seem to like it a lot. Like they seem like they're going down in their valuation right now, but I mean, there doesn't really seem to be more of a reason for that to go down other than like people typing into ChatGPT, generate me this image, and it makes it for them. They're like, whoa, oh, Adobe's gone right now. Like it seems like they're expecting this in their revenue.
There is the whole enterprise side too. Like Adobe's so integrated,
Yes.
similar to Microsoft on that.
Which that you can't. That's a moat as well.
Right.
Another point I would like to add, and I would like to hear all of your opinion about it. I feel like right now it's a very big move. People get a lot of their news sources from influencers rather than from different like news sources. And a very big movement that I saw right now, a lot of channels, influencers are being bought up by private equity. Everything that they do, everything that they added, everything is 100% done through Adobe. I'm sure like that is literally the industry standard. Like I'm not really sure where I'm going with this, but I want to hear your opinion about it. Like that the private equity is moving into actual influencers and that they are reliant on Adobe.
Well, I think everyone's moving into influencers. Anyone with sort of some, I mean, even we're doing that kind of. Look what we're doing right now. But what were you saying, Mario?
I would say
But
like
to Adobe.
actually the growth of influencers and like content through Instagram and TikTok has actually hurt the Adobe stock because a lot of those apps just have like the quick edit features built in, right? You can take video on Instagram and edit it on the spot. I don't use TikTok, but I'm assuming it's the same thing, but more robust. So it's almost like the younger generations are trying to move away from unintentionally from like Adobe.
But at any like larger professional scale, you would still do it through Adobe. If it's like, yeah, if you're shooting some video for your personal reel or something like that, of course you might use, I don't know, CapCut or Instagram or TikTok, whatever you have inside of it. But if you have a big following, you have it monetized, you have like contracts with advertisements, stuff like that, you're definitely gonna try to provide the best product possible, which you could only achieve through using Adobe.
Right. Yeah, I would agree with that.
I just want to add in here, we should pay attention to their monthly active users. In their Q1 fiscal year report, their monthly active users were up by 17% year over year. That's contrary to what we're seeing in other software companies, like Duolingo, for example. So let's keep an eye on that because that could really indicate, kind of to Al's point, like, is it going to get worse from here? The market metric pricing and the general software shift that, the pricing for all these other companies, Salesforce alike. But overall, there are going to be select companies that emerge as the winners, to Victor's point. It's tough to choose which ones those are, but there's going to be, in my opinion, it's gonna congregate a lot. It's really gonna congregate, and things like Shopify, they might make it, but like BigCommerce or the other e-commerce platforms below them, probably not. So that's how I'm thinking about this, is these larger companies are probably gonna absorb everything amid all these other alternatives being used.
I completely agree. I think the big ones are gonna survive and win them all. Like people talk about, like, oh, all these ChatGPT and Claude will make a really good agent or its own AI by itself, and it's gonna kill Adobe and all the other softwares that are currently existing. But like in order to do that, that takes so much amount of money and time. Like these enterprises will have to fire so many people in order to make these and make sure it's easily usable by the people or the customers and the actual public in the area. So the people who have, or the companies who have cash to buy these companies outright, or the datas, or the agents, or the AIs and softwares, I think they will win the most. I think the bottom half or the bottom 80% will absolutely lose.
Mm-hmm.
Any more thoughts on Adobe before we move on? Okay. So John messaged from he's watching the Discord, and he says, talk about Palantir earnings.
Mm-hmm.
Okay. So I figured while we're on the software stuff, before we move away from software, let's just go over Palantir real quick, real fast. Okay. Because I guess it's being sort of lumped in with the software names. Okay, so let's see. They beat on revenue estimates, they beat on EPS estimates. All right, revenue growth 85% year over year, that's crazy. So I guess, the arguments about maybe justifying their valuation, well, if you keep a revenue growth rate that high, who knows? Okay, yeah, everything's growing. I mean, maybe did they benefit? Maybe they benefited from the war and having their technology used more. I mean, we'll never know for sure.
They'll be big beneficiaries of the new Pentagon defense budget, which I think is like a 42% year-over-year increase.
Yeah. So, anyone thoughts? Who holds Palantir? Who loves Palantir? Who hates Palantir? Okay. Anyone have thought? Anyone who's holding Palantir? Like, what's your whole thesis? Or,
Wish I got into it earlier. I'm not holding.
Yeah. Let's just take a look at the stock real quick.
End of Times, Police State.
Yeah.
You know, Blade Runner.
That's
type
right.
vibes.
Big
Yeah.
Brother.
Yeah.
Big Brother.
So yeah, valuation wise though, this is very, very rich. I mean, they don't have debt like a lot of software companies, but the PE of 230 for a company of their size, so it's 300 billion market cap. It's being priced for super high consistent growth. And historically, companies have never been able to sort of sustain the type of 50 to 80% sales growth year over year, whatever it is, like for more than a small period of time. And Palantir just seems to be blowing everything away expectations-wise in that regard. So it's sort of, that's why the stock has been it's been crazy the last few years, but the last several months it's been rough, probably because of the whole software slide affecting them. So it's just one of those things, like I think for a lot of funds, Victor's not here, but a lot of funds consider a stock like Palantir uninvestable because it's just, you don't know how to value it. It's really up in the air. It's really up for debate. Like, you either think they're going to grow into, that or not. So it is what it is. I think they do have a monopoly on whatever it is they do, and they're enterprise software locked in with the government. They're trying to branch out into banking, helping banks, helping telehealth companies, etc. So they have a lot of cards to play. If you're backed by Peter Thiel, love him or hate him, it's like he's connected. The whole PayPal Mafia group, they're all connected. So it's like you'll be able to secure funding no matter what. You'll be able to do deals no matter what. And under this administration, which is probably quite favorable to it, the floodgates are wide open, regulation-wise. So, in terms of just the business dynamics, I think it's very favorable for Palantir. The only knock you really have is the valuation part. And that is a strong factor to consider when you're talking about stock investing. So
yeah, I'll add too that if I ever met him in person, I might want to punch him in the face, but the CEO is
Alex Cart.
Yeah, he just
very opinionated.
From an investment perspective,
He's very opinionated.
It's a good play.
You either love him or you hate him. Okay, so I think that's enough for software, unless anyone has more thoughts on that. But let's get to Avis. Let's get to Avis, the car. Has anyone used Avis lately? Yeah? What do you think? You like it? It's okay. It's just whatever. Yeah. So their stock had kind of a crazy short squeeze. Yes, it had been running. A lot of people. So I trade like short-term stuff and I short a lot. So kind of in the secret private chats I'm in, there's a lot of people that have been trying to short this and getting blown up, and that's just how it goes. And this thing is what sort of like, I think it was Hertz maybe last year, like a bankrupt, semi-bankrupt, just dying sort of brand, and it's a very cyclical area, car rental. But they negative book value. Okay, so yeah, they got pumped up from what? Let's see. So in March, they were at like 90 something bucks a share. They went all the way up to 847 at its peak. Okay, dang, we should have just bought. We should have known. We should have known this would happen. And then of course, it was such a crazy run that it crashed and went down. So there's a lot of stuff, I think, chatter on like why this happened, like some GME like short squeeze dynamic, but we can. Dive into this. I think it was like 2 funds that were responsible for this whole thing. That's the rumor. Okay, anatomy of a manufactured short squeeze. Okay, yeah, so one of the craziest stock moves in history, yes. 572% rally followed by a 74.5% 1-week crash, yes. Okay. Different from GameStop in 2021. The mechanics behind the scenes were different. Okay. It wasn't dumb money from retail, it says. It was from hedge funds. Well, it might be dumb money from hedge funds, right? Okay. Yeah, so the float concentration. Okay, so these 2 hedge funds, SRS Investment Management and Pentwater Capital Management, together controlled approximately 71% of Avis shares, alongside cash-settled equity swaps. Short interest stood near 25% of shares outstanding. That is very high, against a float of just 10 million. That is a very tiny float. So the float is the amount of shares that are tradable, and so yeah. 10 million, usually 10 million in the tens of millions is pretty small. So like, it's a supply and demand thing, you know. It's like based on scarcity, you know, if a price gets bid or sold in a certain direction, it's gonna be more violent if the float is smaller, you know. Just like how if Bitcoin, I think, is float locked. So it's very prone, especially in the early days, to like squeezes, et cetera, because of that whole, it's a trading mechanics type thing. So that combined with these hedge funds controlling it, okay. All right, so yeah, there were negative shares available, okay, okay. Yeah, the fundamentals were bad, EPS miss, yeah. EV fleet impairment charge, okay, they've just been struggling. You know, this company's been dying. Bad business, weak balance sheet, declining industry, real fundamental reasons to short. So yeah, the short float, well, as last reported, 22%, usually anything above 10% is quite high, 20% is very high. So that's like the amount of the float shares that are actually just held short. So normally, historically, there's lots of academic research on this, high short float stocks tend to underperform the market because these companies tend to be bad companies. And hedge funds, which tend to be more informed, you know, participants in the market, they usually have done their research on this. And so normally high short float stocks underperform. However, there's exceptions. And when the exceptions play out, when hedge funds get it wrong in their research, or there's some trading mechanic short squeeze, it can be, you know, it can be very violent, the squeeze with the high short float, because of course there's panic covering because, oh no, you're getting margin called and now you gotta buy back your shares to get out. And so that's how you get stuff like this. That's how you got GameStop in 2021. This is what I trade like every single day, just on a smaller scale usually. But this is just how the game works. And of course, stocks, you know, they tend to overshoot. And so when they really go, I mean, it gets crazy to the point where it's just not totally detached from reality, where the valuation should be. And then eventually they crash sharply. But, you know, a lot of people try to short and get blown up, and then some win big, and, you know, there's just a lot of stuff that goes into it. But it's a whole game. And so basically this was just being hot potato by 2 hedge funds. They cash out, walk away. Other people who probably got in later, they get left holding the bag, and they lose. But this is, yeah, CEO's pissed, yeah, of course. So, I mean, this happened with Hertz also. So this tends to happen with like sort of dying companies, like on a large scale with a short squeeze, it's usually like a dying company or a dying industry, and their financials suck, and so they're heavily shorted because they're just, you know, dying slowly. And then, you know, maybe some fund takes a stake because they see like a little short-term financials repair opportunity or something. Could be an activist fund or just a hedge fund looking to do a quick flip, and they might release some PRs or, you know, whatever, some type of news, and it gets trading action going, and then they engineer the squeeze. Let me see if I can get, okay. So yeah, Hertz did this on a small scale relative to Avis. I remember this, yeah, in 2025 from like $3 to $9 in like a matter of like a week or two, and then it kind of crashed. It didn't crash that violently, but came back and then probably went up again recently, just in lockstep. They tend to trade in sympathy to a degree with Avis when it was squeezing within the last month or so. So GameStop again, dying company, retail used to be like big for like person like the blockbuster of video games or whatever it was, and then heavily shorted, and then they saw an opportunity. Someone posed a thesis for like a value repair type thing, and of course that forces some buyers and then therefore short sellers covering. So it's a kind of a recurring thing. So especially in this market, you're going to see stuff like where I don't know what the next thing is. I mean, I think Beyond Meat was another one. They've been struggling. And so it's like dying company, high short float, something to pay attention to in case it happens, in case there's like news catalyst, something going forward. Anyone with more thoughts on? Did anyone play this? No? Okay.
I guess I have one question. I personally think all of the rental companies will die eventually because of the robo-taxis and the taxis going around. I want to hear everyone's thoughts about the Waymo just started operating in Chicago. Tesla's robo-taxi is coming pretty soon to Chicago as well. What do you guys think about the future of robo-taxis and the rental companies?
Aren't there certain companies where you can like rent a car that's just like stationed somewhere, so you go pick it up and then that's like a thing? Well, no, that's a rental company. No, we're talking about like you pick it up, you drop. I guess that's just, I don't know. I'm trying to think of what it was. Might be Zipcar, but
yeah, Zipcar. That's the one.
Yeah.
I personally think the reason why I think all of these rental companies are going to die is because the robo-taxis and the Waymos and all of these taxis are going to be so good in the next 10 years that the fact that we're going to be able to go from Illinois to another state just by one charging, or without you having to drive, we're just going to be sleeping and playing music and watching movies with our kids. And I think that's going to be a really huge move for all of these companies like Google and Tesla, who's playing this especially, is investing a lot. I think NVIDIA is investing a lot into this as well, so I want to hear your guys' thoughts.
I mean, I'm just a believer in it just on the fact that it's going to reduce the death rate to like near zero, Like, I personally believe everyone should be banned from driving cars ever. That's a blanket, if I was a dictator, I would enforce that, because that would immediately like just save like something 100,000 people per year. So we're gonna get there. Obviously there's gonna be a lot of pushback here and there, but that's the inevitable sort of like, thing. I don't know about a driver ban, but I'm saying as robo-taxis and then self-driving scales, it's gonna get safer, it'll be better for people. They'll be slow to adopt, but like with any sort of new thing, just like when automobiles were invented and scaled, there was lots of pushback too, like, oh my god, this is so dangerous, versus the carriages with horses and stuff or whatever, which it's like these horses.
They were actually right about that though. They were.
They were, and it took a while, but we don't even have to deal with that sort of like risk like that they did to that extent.
I do think it's funny, when you speak to like an older person, they're like, oh, like, I'm not gonna get a car that doesn't have a human driver, like that doesn't sound safe at all. But it's like all the numbers say that humans are like, I mean, they're the worst drivers. Not that there's other species of drivers, but like we're terrible drivers.
Yes.
We're so bad. And so it's like every step, which I'm like, even if like you only cut the accident rate in half, it's like a significant improvement over the status quo.
Yes.
Yeah. And
Quinn, yeah.
You go ahead.
I was gonna say, I think I read somewhere that any accident to do with autonomous driving had to do with some other human being involved that messed up first. It wasn't the self-driving car; it was a human that crashed into it or didn't follow the rules or something. But I think as the technology gets better and as like the way I think about it is that I do agree eventually those traditional car rental companies will go out of business, because even if like the old boomers don't like it, like we'll have a generation that grows up not knowing anything but having robo-taxis, right? And as that becomes like more ingrained into our economy, into our society at large, it'll just become another thing. It'll be the next Uber. I remember when Uber first started, we were like, oh, we're gonna start getting into cars with strangers now? Like, as kids were warned, hey, don't go into a car with a stranger. Now we're doing it through a phone. So this will just be the next evolution.
Aren't purely car insurance companies gonna suffer from this, or are they gonna make more money off of it? How does that work?
I'm curious about that actually.
I think they will benefit from this because they will have less money to pay out because there's less accidents. What Tesla is doing right now is comparing. So like in order for all of these robo-taxis to go around the United States of America, they need to lobby all these regulators and governments. And if the Tesla's robo-taxis are saying we're killing more people than human beings are, they're not going to allow that. So what Tesla is doing, or the Waymo is doing, we're operating in these certain cities, and we're making sure we're not. Those accidents are not happening. If the human drivers are making accidents 100 times a year, or human beings are making accidents 100 times a year, Tesla is only making one time. So that's what they're doing. They're going to implement so much, and the insurance rates are going to be going down so much. And obviously, a lot of insurance companies are favoring Tesla's Robo-FSD because it makes less much accidents.
From what you're saying, from that, and from thinking about it a little bit more, they're probably gonna make a lot of money because they're not gonna be able to. They're gonna be like, oh, robo-taxi. That sounds like it's gonna be really dangerous. You have to pay us a bunch of extra money, but then statistically, it's just gonna be way less dangerous. So they're gonna charge crazy premiums and not have to pay out anything. So I think in the short term, what do you guys think? Is it gonna? I think it's gonna make money based off of just that thinking.
I don't think there is any short term. I don't like it short term at all. So Eric, if you go back up to the last chart that you had up there.
Tell me when to stop.
Keep going. All the way, last prompt. Keep going. Keep going a little bit. The chart's up there.
That whole thing. Yeah.
Yeah, I think it should be higher. There you go.
There we go.
No, that's not it.
There we go. This is it.
Oh, that's weekly rides. 500,000 to a million. So let's think about that. So there's about 3,000 Waymos with 500,000 weekly rides. Just do the quick math.
So how many rides is that per?
Each Waymo's doing 167 rides per week, and that's pretty incredible in my mind. But think about, there's humans that are in these cars. They're gonna get them dirty. They're gonna need maintenance. So I don't think this is really something significant until there's scale. Yeah. 3,000 is not enough to make a dent.
Can you imagine all the dumb things humans are gonna do in these self-driving cars?
They're gonna have cameras in the cars, and they're gonna charge you extra if you make it dirty.
Yeah, but plenty of people are not gonna care.
It still takes the car off the road. It takes the car off the road for how many rides a day do they have to do?
Those numbers are so crazy impressive, though.
24 rides a day.
I think the insurance it'll just shift around to certain aspects, like other risks, like people being idiots in the cars, or they'll justify some reason to get paid.
If we're trying to look at stock winners, I would try to find what insurers are like most willing to work with these self-driving.
Well, Tesla
companies.
has their own insurance now.
Do they?
Yeah.
Or what insurers are like lobbying in favor of self-driving? Those are probably going to be the insurance companies that win the most, I would think, if they're already preparing their businesses for that adoption.
Maybe Lemonade, like something like that. Let's see.
I want to see where the money's at. Like, who's lobbying in favor of this? Because I think this will get politicized. If not in the next election, the one after that.
Yeah.
Because that's the only way you can really just get mass adoption quicker. Right. You have to politicize it.
Tesla owns a vehicle software fleet insurer. Okay, yeah, so they can just undercut vertical integration. Okay. Tesla insurance 50 to 100 billion annual premium potential. Okay.
That's another political concern.
Yeah, Tesla insurance, clever. Berkshire, it says.
That's a small part of their company.
Yeah. Okay.
Any pure
Progressive
car plates.
Okay, they do rideshare insurance. So it's just speculation, they haven't really figured it out yet, but I'm sure they'll probably adjust around. So there's Progressive, Travelers, okay, some of these other sort of more pure insurers, okay. Yeah.
I mean, they're just gonna shift from B2C to B2B, I guess, right? Like, and just
Yeah.
insure the companies rather than the individuals now.
Yeah.
Lemonade, I think, has been most on top of the AI thing, except they're priced for beyond perfection. Yeah, this is, I mean, there's no value or whatever, something to this. It's just purely speculation. For that $4 billion market cap, if you want to take a lotto play on like who's going to be first in like AI, self-driving, robo, anything insurance, I think Lemonade. I'm not an expert in insurance, but they've been sort of like very, very explicit about being AI driven.
Speaking about speculation, is anybody, this might be taken a step further, but is anybody bullish on a potential drone taxi and that whole entire industry?
So are
There's
you
a
talking
big
about
China
EVTOL
move.
because that's on the
Joby Aviation.
Joby, okay, let's talk about
What's it
EVTOL.
one timeline? Do you
but
mean like
there's
within
also,
next decade or?
I used to invest in eHang for a little bit, and that was a questionable security to hold on to. But I know China's been making a lot of movements towards it just because of the crowded roads and just population aspect of everything. Just having people fly in a
All right, so
drone.
there's sort of this new concept. It's incredibly speculative. It's pre-revenue, you know. So it's like these little. It's like kind of like the V-22 Osprey. If anyone knows this plane, it's like the vertical takeoff and landing plane military would use. So now there's like an electric version of this, and that these two sort of companies are rivals, but they have this thing made, this plane, except they've done some test flights, and yes, it works, but they have not like scaled this up or built an actual business around this yet. So their stock prices are completely based on speculation. So we can look at Joby, $8 a share. I mean, they did have a run to 20, whatever. $8 billion. They have like essentially no sales. You know, 53 million in sales for an $8 billion company. It's nothing. Losing money.
Can you look up eHang? EHAANG.
1 second. Let me go to Archer just to show. And then
You pull up pictures of what these things look like.
same thing
too.
for Archer. It's a $4 billion company. What was the company, Jordan?
It's EHANG. That was one of like the first I knew of.
eHang.
regardless,
EH. Yeah. China. Okay.
Wait, can you look
This
at
is the company eHang. Yeah.
monthly breakdown?
Monthly.
This thing, that's
Okay,
what I
they had
was. The
they had a
beautiful times.
2021
Good
growth
times.
stock style short squeeze, and there was another BS. Not BS, but it was a SPAC mania thing.
Jordan was a
No,
millionaire
they
in
had
2 weeks.
speculation. There was news being released, fake news being released about we're getting this legalized for airspace. Or
Right. That whole 2021 post-COVID boom market, you know, with the low rates and the stimulus, you know, a lot of companies saw the opportunity to IPO via SPAC, which is like a crappy way of doing a reverse merger but you can speed run it, you know, bypass a lot of regulations by doing this. So EH is one of those as well. So yeah, this is just very experimental at this point. I mean, it works. So the headline moment, Joby just flew from JFK Airport to Manhattan in 7 minutes. Okay, by car it can take 1 to 2 hours. Yeah, so it's like if someone has a little more money to blow and time is an issue, there's possibly a niche market for this. You know, it's like better than maybe if you wanted your own private helicopter or something. So it's like a NetJets type solution for sort of like that helicopter-y travel. Does anyone own Joby stock or Archer?
We have a believer.
All right, Christian, let's hear your thesis.
So I own Archer. I
Yeah.
bought the company like $4 a share. Still profitable. Missed out. Sure. Yeah. No, my whole thinking behind this is just we are gonna see air taxis and self-driving cars come out in the future. But a couple of the issues I had with these companies is there's a lot of infrastructure spending that's needed for these companies to really operate it in the way. Otherwise, they're just like a helicopter service at the end of the day. Because if you're trying to build this in New York City, how are you gonna land these inside the city? Except just towards the riverside, how are you gonna make them? So there's a bunch of questions with that. But we did partner with Uber. Joby partnered with Uber this year. It'll launch in the city
ready to buy, so that is something to see out for.
So is there a pilot piloting the one person, or is it just one person flying it themselves?
So
one
it's-
person just gets into it. It goes up, takes you to where you want to go, and then back down.
So you need an EVTOL license just to even
It's terrifying.
take advantage of
It's
this
terrifying. It's just a
opportunity.
user.
Yeah.
I think there's a lot of like ex-Air Force or like ex-pilots who are like going to be riding this.
Seems like a more specialized tough, because I know the V-22 is like historically they've had a lot of safety incidents because it's such a difficult, like helicopters are difficult to fly relative to planes, so it's probably an extra, maybe they have to pay these pilots even more. And if you're trying to sell a seat for $200 and you only have what 4 passengers.
Can you look up a picture of it? I just was looking at Muhammad's screen, and it was just very. It's
That's
just
fucking amazing.
as a person, human being, it's just intriguing.
Well,
look
this
at
thing.
the
You guys have seen
drone.
this, right? Yeah.
Does JOBY have like a prototype that they have out there? Picture of
Just
that.
type in JOBY. There
Yeah,
we go.
this is what. So they have like a crap ton of propellers because it's electric to make up for it. But I mean, it's a small cabin, you know. So if you're thinking about like the cost per person, I think 200 is probably a starting point just to do some customer lock-in, right? Because there's no way you're going to be close to profitable at 200. I'm not like an expert on this whole private something, but I'm just thinking, let's.
Is it cheaper than a helicopter? In theory, to ride in?
Yeah, let's see.
Okay.
Well, I don't know, but
Not right now, probably.
And by the time this becomes more regular, we might just have self-driving. In which case, like,
Well, I was about to say one thing I just thought of is if traffic, becomes more efficient, your need for like these types of services probably falls off.
and the way to you can't even. It's so hard to make it self-driving 2D on the street. This thing's gonna be impossible. They're not gonna be able to keep up with that.
I want to put this. Yeah, I'm not gonna just read.
Don't ask it to make us read again.
Yeah.
Don't make me read the rest of the night. Give me tables.
Soon we'll just have an AI agent bot thing that just,
Doing all this.
Okay, so fuel costs, electric versus, okay. Pilot wages, it's assuming the pilot wages will be this, we'll see. More maintenance for the Bell helicopter. Okay, so operating costs, 55% lower, it says. 385 to 865 versus 950 to 1900. Okay, fixed cost per flight hour. Okay, EVTOL is higher because it's early stage. Okay, just more in insurance fees, pilot training and recruitment, etc. Capital cost per flight hour. EVTOL 220 per hour lower. Okay, total cost per flight hour. Okay, EVTOL supposedly. Okay, assuming everything's working up to par, 40% lower. Okay, so I think that's what if you're an investor in these companies, that's what you're sort of banking on. The question is, what's the total addressable market? I know they're doing some rollouts right in Saudi Arabia or Dubai Dubai. Okay, so maybe in the Middle East and some of these like really rich. I could imagine them doing something crazy in China. But not for the individual companies, I don't know, but China will come up with their own EVTOL. So I think EVTOL could become a thing and could give these stocks more run. But again, like I say, you're buying just on pure potential for execution. Can the management and the engineers figure it out and make a profitable business out of it? And it's gonna take years. And in my experience, pre-revenue companies, you still got time. You probably need to wait for the actual business rollout to sort of, or the rollout of passengers taking the flights, et cetera, to see how it is, and then you'll get a gauge on how is demand really, for this, and how could this scale. So we still got a long way, but again, this market's pretty insane. You never know if things come back, if rates come down, if the AI trade, just anything growth ramps, then these could just get bids anyway. So just a lot of unknowns you're dealing with. Know what you own. So there is a valid thesis for it. It's just really high risk. High risk, high reward. That's just how it is. All right. Anything else on EVTOL? Do you want to go through more of these topics, or should we?
Not really eVTOL related, but aviation related.
Okay.
Is anyone going to be a part of Spirit 2.0?
That's so sad.
Do we know what
There's
that's
a
about?
2.0.
2.0.
Yeah, so Spirit, there's like a whole movement to buy Spirit and make it like publicly funded and publicly owned, the first publicly owned airline. And I think they've pledged $88 million before the site crashed, but I think they're trying to get it back up. And they need 1.75 billion to buy it. But
Didn't the government try to step in at all? The
I
government?
don't think so.
No?
Yeah, the Trump administration
They
said they gave them an
tried to.
offer.
Oh, really?
Spirit. I guess we don't know what the offer was, but it was
Okay.
bad enough that they decided to go big.
Yeah, they wanted 90% control.
Oh,
Yeah,
what?
That's why they let it die.
They
And he
could make
also-
it the
did he want
Trump
his name on
Airlines
the
after
side
that.
of the
Yeah,
plane?
Trump
I wouldn't be
Airlines.
surprised.
Oh,
Yeah.
man.
They literally make it Trump Airlines. Everything goes up in price. It would be fun.
Another defunct airline.
All right, so yeah, Spirit Airlines, I had to go on Yahoo Finance because they actually show OTC. For those who don't know, OTC pink sheet, that's like the exchange you go to when you're kicked off of NASDAQ. You're not able to get, you're basically a bankrupt, semi-bankrupt company, you're trash, can't raise anything, you're dead. No one comes back from OTC, you're just dead. So realistically, that whole movement, whatever, it's great for some like fun publicity stunt headlines or whatever, and I'm sure someone who's a little creative might buy like the domain name or whatever it is, and like just like someone bought the Enron name, it's just have fun with it. This company's dead though. And here's the thing: airlines historically are just, in my opinion, they're very tough investments because it's like it's a cyclical industry. It's commoditized. You're just competing on pricing and just small differences they're all buying the same planes, and so they can be cash cows when times are good, but then the rug goes under once times are bad. They just move as extra multiples of the market both ways. Many of them go bankrupt. Spirit to me is nothing new. We have stuff like Ryanair, which is sort of like that for European people, and that's also been hit hard lately, although it seems that these multiples hold up. It's highly leveraged on debt, but I think it'll be fine. So maybe Ryanair just goes more global, takes Spirit's business. The thing is, actually, I was texting with Al because Al had asked me about this whole Spirit thing a couple hours ago, and I said, all these airline, like Spirit is nothing new. There have been a lot of these operators like, ATA or ValueJet, Braniff, whatever, Pacific Southwest, TWA, I don't know if they were like a low cost, whatever, but there have been a lot of these sort of low cost airline operators over decades, if you want to study that, and it's just such a tough industry. It's hyper competitive, they go bankrupt, etc. Warren Buffett has that famous line, if you want to blow all your money by an airline or something, I don't know, all this stuff. Even Trump had an airline, and that failed. So, everyone.
Does Frontier trade publicly? Is that
it might, yeah. So
what's it? They are part of you.
So who's a low cost?
I just want to see like a
They
competitor.
don't have public. I know Alaska.
JetBlue have one? JetBlue?
I think JetBlue does have stock. I don't know how.
There was like a reaction.
Does anyone own any airlines?
Frontier's under ULCC.
ULCC.
I bought it as Spirit.
So that's part of United Continental. So that's part of the whole conglomerate. JetBlue is they've been struggling. They're losing money.
I will say for the Spirit thing, they launched it like 2 days ago, like in the middle of the day, and on the first day they raised like 20 million, and the second day it's like at 135 million. So it just keeps going up higher and higher. It would be interesting to see like if they raise enough money, because right now it's just a pledge so far. But even if they do raise enough money and they buy the company, what does that mean? What does that look like?
Yeah, what are you gonna do with it? Like now you gotta like assume all the. It's like there's so much.
Yeah. The guy who made the
crap
website,
with
like he's like, I
running
want to be
planes.
CEO if this works out.
Yeah.
It's just like some random little line. It's
All right, so for the
vibe
guy, it's a
website.
good,
Like,
it's a
no
good
matter what you
influencer
invest,
stunt.
you get one vote, but you get a higher payout of dividends if you.
Yeah, which I don't know what that. How much does that actually mean? If you put in $500, what does that actually?
It sounds like they're already falling into the exact same trap that kills every other airline, where they just pay out these dividends. And then I read an article that the majority of airlines going into the Iran war had stopped hedging against oil. So that's why if you just see all these prices for flights have just completely skyrocketed.
Yeah.
They're
Jet
so
fuel
exposed.
prices have surged 70% since the start of the war.
That was the thing that made them go bankrupt for Spirit, I'm pretty sure. It was
Yeah.
They couldn't pay the
Final
oil.
nail in the coffin.
Or the.
It was the catalyst for sure. They just sped it up.
Okay. Yeah. So I mean, it's a fun publicity stunt. I think, especially for whoever made it. You know, they could catapult their following from that. But realistically, you know, kind of like the Allbirds situation that we talked about last meeting. It's like realistically, you know, can they actually create a tape? No. So I'm gonna say no. You know.
But it would be cool.
It would be cool. Yeah, it would be cool. All right, so do we want to talk about the Lululemon and new CEO thing from Nike, or there's some other news about, let's see, the whole prediction market scandals?
Lulu, I just heard that the Texas Attorney General, I can't remember, but they just launched an investigation into Lulu because of the forever chemicals that are in them that have significantly reduced fertility rates.
But that's with every company that uses, what is it,
Athletic wear, PFAS, yeah, exactly. Lulu's under fire for everything.
So it's a question of, with those lawsuits or whatever it is, to what extent do they affect future earnings and revenues? And we dived into one, I think Mario had brought up about, what was it? Do you remember? It was something where it was it was significant, or no, just something where it's some news, right? And it's is this actually going to affect things, market cap wise or whatever? And we concluded it wasn't.
Yeah,
I forget.
tariffs thing.
Yeah, that was a tariffs one.
Yeah,
One-time payout thing. Okay, so they got a new CEO. The market does not like it because I think partially because that CEO came from Nike, which is also struggling, and so it's you're going to take a manager from a struggling company to another struggling company, and I guess Lulu has been struggling. Who shops at Lululemon, or who has shopped at Lululemon? Yeah. Do you still do? You still get their stuff? You like their stuff?
Yeah.
Okay. Well, okay. I think that they have staying power, you know, or something. They've just been hit hard.
I think that they've been hit by that whole K-shaped economy, right? So you have a small group of wealthier consumers doing the majority of the spending, and so because they're just doing so well, you know, they're almost in a position where they want to differentiate. I think Eric, you posted something in the Discord recently that kind of talked about that to some extent. You know, people looking for social clubs and just differentiators. I think that extends to clothing. It's also why Nike's struggling, where it's you don't want to wear the same T-shirt as someone else when you're out and about. You know, it's their core group of consumers are kind of pivoting to different things, and they're priced as a premium brand, so it's too expensive for your everyday average consumer that's kind of tailing off right now.
It's just so jumbled up. Whatever. I'm gonna try to go into your point.
A good way to see that is check. I don't know if H&M is public, but the lower tier sort of clothing brands, if they're seeing the same thing as Nike do, or if they're not.
So we also talked about Nike recently. I mean, the whole consumer slide has been killing everyone. And then I think Nike extra, just because they've been through multiple CEOs in recent years, and they haven't really been doing much lately, and they've been losing market share to On and Adidas and so forth, coming out with new things. But Nike does have staying power. They have a strong brand. They might be primed for a bounce comeback. So going to the CEO part, the new CEO of Lulu is just a Nike executive. So it's kind of wait and see. You don't know until you wait for a few quarters of the CEO being in. Just like with Open Door, it took a few quarters before you saw the CEO's implementations come about. Same thing with Apple. It's going to be a few quarters before we see John Turnus, the new CEO, and what his implementations do impacting the financials. So it's going to be a few quarters for Lulu. I don't know. Gosh, Claude is being extra slow right now, or maybe I need to start a new conversation.
Yeah, your conversation's too.
Okay.
Just real quick to answer Al's question. Yeah, H&M stock's up 22% the past 12 months. Lululemon's down 53%.
Mm-hmm. Do you think? Yeah.
So,
You think the trend's gonna continue?
yes.
Or are you gonna buy H&M off that, or some other stock like that?
Probably not now.
If you look at luxury goods companies like Ralph Lauren or all these other goods making companies, they've been making pretty good profits over the last year or so.
This is Ralph Lauren.
Yep.
Yeah,
Like it's
pretty
been going
solid.
up, like compared to the lower goods. I think as long as
Yeah, Ralph Lauren's
inflation just
crushing.
keeps all these K-shaped economy, like what Victor said, is going to continue, and all these good luxury companies will continue to succeed.
Yeah.
Because people will like to go out there and show out. You know, all these people are going to be like, oh, I have Ralph Lauren, or I have this other good luxury goods like Hermes. You know.
Yeah.
Didn't Ralph
Things
Lauren
like
like start selling kind of lower tier sort of apparel?
Do you?
Or
I don't
think it's
necessarily think a lot of like lower income people can buy Ralph Lauren. Like if that makes sense with you. Like it is pretty pricey for them still. But it is, we are like, for like usual income people, we can buy that. For middle income families or people who can afford it.
It's true, Al, they did do that.
Alright, going to Sneha's point,
It might
the
have been
whole
made
thing,
to
there's
manage
no like
inflation.
financial amount disclosed with that. It's more of just a sort of something that's being looked at. So we don't know how that gets. Probably not big, I would imagine. But yeah, okay. So the luxury. Here's the thing with retail, especially clothes. I mean, those things are so tricky, dude. It's kind of like investing in airlines. It's just tough. It's very cyclical. It's very trendy. If you're good at like spotting the new trend, anything retail, then maybe you can ride it for like 1 to 2 years on something high. You know, like Abercrombie in the 2000s or something. It was big. The stock ran up like crazy, and then crashed once they went out of favor. You know, so again, Allbirds had its day in the 2010s and then kind of crashed. Now it's a meme stock. So retail, anything, apparel, clothes, shoes, whatever it is, it's just going to be something where you need to be like right on top of the trends. And sounds like Ralph Lauren's got some stuff going for them, and Lulu doesn't right now relative to just what the median is.
We can relate this back. In a previous meeting, we had spoken about Walmart and how they did basically the opposite of what we just said for Ralph Lauren. They started catering to a higher end consumer. So maybe I think the play in consumer is look for the companies that are playing both sides, but aren't stuck in that no man's land where you're kind of just like you can't appeal to either group of the K-shaped economy. I think that's where you want to be. Walmart's like a great example of like their stock's just crushed the past year.
Look at TJ Maxx. TJ Maxx is like the most successful clothes retailer ever. You know, that's why you just go with who's catering to the people. You know, just like with Walmart. Like you talk about luxury stuff. Yeah, it's cool, but like as a business, making money on that, it's freaking hard. You know, the trends come and go. You have to be all like, you know, exclusive, and then that means you're already like flushing out a potential customer base by that, and then you're pricing high. You're expecting people to just pay up for it, but then that's based on like, you know, the macro trends, etc. And if like if it's a risk-on environment or not, you know, people spend more or not. And so TJ Maxx is something that just, you know, keeps trucking because it's for the masses. So I think if you're going to go for retail anything, you go for what caters to the masses. You know, so there you go.
Real quick, not to like beat up Nike while they're down, but it does. And I think Nike's an interesting opportunity to view a company through the lens of how many failures can a company absorb, specifically from management. And just to touch on a few, they failed to acquire Under Armour in the early stages of the brand. They lost Steph Curry through really poor pitching. They passed on purchasing Hoka when they were nothing essentially. They didn't scale some of their key acquisitions in Umbro and Cole Haan. They under-leveraged the Converse brand. They don't own any of their supply chain or tech. They fail to continue to push to consumers through storefronts like Foot Locker. They lost key athletes like Roger Federer and Tiger Woods to the point where Tiger Woods even has his own clothing brand now. They overinvested in NFTs. And slow to react to early stage trends, but that's not a big one.
Was all of this while the new Lululemon CEO was?
The key one for the Lululemon CEO that I read about was she was on the exec team passing Hoka. I don't know if that's entirely true because I don't know how you get that information, but not a great setup for her.
All right, so it is 7:40. We're gonna try to not go past 8 p.m. So there's 3 potential topics from the list, or we can just do like a lightning round type of thing if people want to bring up stocks. So what are you guys thinking?
What are the topics?
It's UAE leaving OPEC, the prediction market scandals, or the cable headwinds.
The UAE leaving OPEC.
Okay.
Yeah.
That would be too long.
Who has thoughts on? Oh wait, do you want to talk about that?
Oh,
That would
no.
be too long.
Okay. We can save it for the next one or something. So
I like the lightning round.
lightning round. Okay, let's do a lightning round. Who's got a stock they want to talk about that they're really into that we haven't really talked about? Brian.
I want to talk about the hardware, like what things are really about. I want to think about. I also want to ask you guys about photonics, suppliers of the semiconductors in the future. It's called SI. It's a Swedish company, or I don't know if there's other company, but
How do you spell it?
SIVERS Semiconductors. I've been
Is
writing
that
on this
Civ
stock
B?
for-
Is Civ B?
Yeah, yeah. I've been writing on this stock. It's 50%.
Is that because are you following that anime girl avatar dude on Twitter who has like 500,000? Yeah, yeah. There's rumors that it's.
But I personally think like it's not just a meme stock. I think like if you look at the thesis behind this, it is very interesting, and I think in the future it could really hit a really good hardware markets in the next generation semiconductors. Because right now what they're using for these semiconductor connecting is the coppers, and that becomes really hot, and they have to cool it down in order to cool these semiconductors. That takes a lot of energy, but what they're trying to do is build a photonics or optical version of this. So
what's the ticker?
SIVE.
SIVE.
Yeah, or F after the yeah, that one's right.
Sievers. Okay, OTC. Okay, because it's sometimes foreign companies just trade on the OTC exchange, not because they're bad. It's just
Yeah, it's an OTC.
It's because they don't have ADRs,
Right.
which is essentially versions of their stock denominated in US dollar. So like a Taiwan semi, right, there's an ADR for that, so it trades on US exchanges. But like an SK Hynix, which is like a big creator of memory, they're essentially the equivalent of like Micron but based on South Korea. They don't have an ADR. So
Doesn't SK Hynix have like multiple market halts or something? Like you can't trade it.
Yeah, I think like if you think the U.S. markets are concentrated with the mega caps, and I'm pretty sure it's like 4 stocks that drive the South Korean market.
There's a ETF for that. It's called EWY. For that South Korean ETF.
Yeah.
It's basically owned by like 50%.
That's Italy. Sorry. What's
Samsung
the
SK.
EWY?
It's funny because people are like, oh, shouldn't
It's been going gangbusters.
yeah,
right?
they're like, shouldn't like higher oil prices be hurting a net importer of energy like South Korea? But when you're so tech heavy, when like 90% of your index is tech, it doesn't really get factored into a natural reflection of the country's economy.
Yeah. Well,
Isn't that a pretty crazy return?
big
for
tech
an
country,
ETF?
big tech world. What were you saying, George?
It's a pretty crazy return for an ETF.
Yeah, I mean some of these
Relative to most.
tech weighted ones are going.
I was gonna DRAM. It's not a stock. It's an ETF. It's a memory ETF, and this one has local shares of SK Hynix in it, as well as all the big U.S. players: Seagate, Micron, This thing just launched at the start of April, and I just think it's in that. If you want to diversify, yeah, it's up like 50%, like since it was created.
I actually got an interesting. It's not super related, but Matthew, who I met the other day, mentioned it to me. And you know how there's been these private share company ETFs, kind of stupid lately. VCX getting bid way above its NAV, et cetera, et cetera. It's probably going to be more of a thing. However, there's this BlackRock ETF. BSTZ. It's a closed-end fund, Science and Technology Term Trust, and they have, if you look at the holdings, sorry. I think this might be like, if you want some exposure to like an Anthropic or something. Okay, so it has 16% Databricks, private company, that's really hot in the startup land. But then it has public company holdings like NVIDIA. And then it has ByteDance, a little bit of Anthropic, 2%. Quantum, I don't know what that is. Sounds stupid. But we don't like quantum computing here, but that's for another debate. So it's got a mix of like public and private. It's a little speculative. BSTZ, just another thing. It hasn't been bid up to the point where like something like a VCX has, I think, with the Fundrise Innovation thing, which had like SpaceX, OpenAI, Anduril, Databricks, all those hot ones that everyone wants, Anthropic. So it's a little sneaky one if anyone wants some exposure to like private company shares through public markets.
Well, on that note, RBI is taking that investment on OpenAI.
Oh, they're adding OpenAI to the portfolio? Yeah.
We won't know how much till the end of the quarter, but...
Right. So I don't like these in general because the problem is in finance, you know, too much of something is a bad thing, and what's going to happen, like with subprime during the housing boom and then bust, like they're just going to keep issuing these types of funds that hold private companies. It's going to distort valuations, especially in the private markets. And then who knows? I mean, it's just another issue we're watching is crypto treasuries. There's now over 100 crypto treasuries trading publicly on the stock exchanges, and it's like there's just no end to it. They just keep coming out with it because they take a little expense fee, whatever it is. It's like a little money grab for the managers involved in the funds that issue these. So really do your research on the holdings of it. Raza's here. Right at the end. Right at the end.
That's how I do it.
Yeah. And you know, you can get shares of private companies publicly exposure through these, but it's a tricky one. These are usually trading at insane premiums. Anyone else lightning round picks? Any stocks they want to bring up?
Can we touch on Intel and their crazy run?
Yes. Do you hold Intel?
I do.
Okay.
Anyone else hold Intel?
Mohammed?
I do.
Nice.
Okay.
So is our government, 10%.
That's
They're
exactly what I
benefiting.
bought.
Yeah.
Yeah, Intel is government owned, or it's government, backed by the government. You know, when you have big backers or influential backers, I mean, from a company perspective, like I say, you can get funding. You have sources of funding now. They will open the floodgates for you in terms of regulations. They will get you who, you know, the partners you need to get, you know. And so Intel will be able to raise the capital they need to do this turnaround. It's just a matter of can they do the turnaround business-wise. I think it's still in the early stages. Correct me if I'm wrong.
I would agree, yeah.
Would you keep holding Intel even after this run?
That's what I've been asking myself in the mirror
Yeah.
every morning.
I mean, now it's trading at like, I mean, they aren't profitable still. It's going to take forward PE 65, so it's expected to become profitable, not like super profitable.
I've really only known Intel from like the consumer side, being into like computers and stuff. So I don't really know what they're doing with all this new investment, or how they're going to compete with AMD or NVIDIA.
What were they doing with their money that their income ended up being negative? People need the CPUs, and
I
Doesn't
think they
make
were.
sense.
I think they just got killed over the years. by
Yeah, they
the
had a couple bad
competition.
releases
Yeah.
in the silicon lottery or silicon lottery, whatever they call it. A couple of bad chipsets.
They really like got killed by NVIDIA. Like Intel used to kill NVIDIA, but NVIDIA literally killed Intel. And also like in order to make these chips, it's really hard. And like these fabs, this fab manufacturing sites cost tons of money. So like Intel has been trying to build this sites and trying to build this manufacturing sites, but it's been failing, and that's why they've been not being able to be profitable. The margins are going bad. But obviously, you know, the administration bought this company. It's been going pretty nicely.
I think the bull thesis is basically, you know, you think about all the capex spend that the big techs are doing right now, and now they'll, I don't know if you guys have noticed, but with Claude, ChatGPT, it's getting shorter, rate limited, or it's running into walls. It's not as good as it was a month ago in terms of the answers. I've been having to prompt it a little extra, and so they're kind of running into their compute capacity or something, and now they have to like strike deals with, say, like third-party data centers, the neo clouds like Iron, CoreWeave, Nebius, etc. So everyone just is gonna. I think it just shows demand is so insane in AI, no matter what aspect of it, that you can basically bank on, okay, Intel's probably just going to benefit from overall demand, whether it's demand for their CPUs or something, like in general. Like just because even NVIDIA might not be able to fill that demand themselves. It's going to be distributed out, and now Google's selling their TPUs. So it's like there's just so much demand that I think maybe everyone just gets bid up in the meantime. So I'm not like a super Intel bull, but there's just the tailwind is very strong, and you probably get a tailwind just under this administration, probably until the next election cycle, just because they're not going to like close the gates anytime soon, especially for Intel, which they own. So, probably at least for the next year or so, probably just get
This makes me ask, like, what other sort of companies have gone under the radar because they're not the NVIDIA and all this stuff, but they do create hard stuff like Intel was. What else is due for a pop? Because I agree with what you're saying that it's just going to go up because everything in this field is going up. But which ones are like, where are the Intels that haven't gone up yet? Because I think they're all going to go up.
Let's ask Claude.
Find me a hardware name that hasn't gone up, dude.
Yeah.
Yeah.
That's the Sivers.
What'd you say?
Sivers and semiconductors.
Yeah, that's well, it's already been running because of that freaking anime dude guy. Like, there's some crazy accounts
But
getting
the
so
thesis
much
is
influence.
absolutely doable.
Yeah,
Like,
yeah.
It's not just a meme track. The
Yeah.
thesis is actually correct. Like the demand of these semiconductor chips are so high for the fact that we're probably not going to see this stocks drop in any time. I mean, it probably could drop in shorter term. Like in the longer term, it will continue to go rise. At the end of it all, the AI companies who own the most compute will win, no matter what, because compute is intelligence.
GFC. Sorry, I'm just going into. It says Global Foundries GFS. GFS. Okay. What is
I think
it?
it's still private, or no?
No,
Or
I
is
just.
that thing?
No, that's also been running. I think all these are moving. It's just a matter of, look. So with stocks fundamentally, like people talk about, oh, has it run? Has it not run? Like I say, look at the valuations. Like look at the market valuations. It's not about where it's been. It's about where it's going. So you need to think forward. Stocks are forward looking. Just because something's run like 200-something% doesn't mean it's not a buy. I bought Iron at $6. Then I bought it again at like 15. It had already run, it had doubled, whatever, almost tripled, and now it's at like 50, right? And so it's like you think about, the sort of like, I think it's better to do like a relative market cap analysis or something where you look at a company and then you look at who's in the space and where could it get to if it's like competing with them or something. So don't worry too much about where it's been, unless it's doing something stupid like car, like Avis Budget rental. There's levels to this. So like 100% gain in something, it's not, I mean, oftentimes actually, and I mentioned this maybe in the second or third meeting we ever did, like with smaller company, like maybe mid-cap, small, large cap size, a run is actually indicative of continued momentum because it's like there's some information being priced in by more informed players. So it could be like with Brian's Civ B thesis, that the recent run in it is still like, you know, early. Civ F. You know.
Yeah, that's the.
This is the one. Okay.
You can look at SIDE.
It's a 1 billion market cap. I know Claude said that earlier. It doesn't list it here, but
you can go to the SIDE. That's the real exchange stock of a different country.
yeah. So it's run since the ones. Now it's in the fives. But again, it could go to like 20, 30, 100. You know, it could get stupid. But like, it depends. You know, it really depends. Try not to focus too much on like the chart and what it's doing. Like really, this is why in the investing group we're really trying to dive into like the business angles, the fundamentals. Because look, stocks are shares of companies. Companies are organizations of people. You know, and it's just coming together to try to build a product or service that can be sold that usually tries to improve humanity. So, like, really focus on the business aspects, I think. That's the thing. All right. Anything else for this lightning round? Broadcom. Okay, we'll go.
Go that way.
Okay, Broadcom first. Okay. Broadcom, do you hold shares?
I do.
Yeah. And so, do you want to explain what they? I know they do components for TPUs, right?
Yeah, they do. They do
AVGOs.
custom silicon and like larger scale AI networking.
Oh.
So when you have a data center, there's stuff that connects, like they have hundreds of GPUs, TPUs, whatever. It connects all of those together at a much larger scale.
All right. Does anyone else hold Broadcom? Okay. What's your thesis? If you have one, or it's just
It's
tech.
Nancy Pelosi's largest holdings.
I mean, that's valid.
Yeah.
Like,
Enough said.
again, like mimicking insider trade. Like, I know the Nancy Pelosi trade is probably overdone by now, or who knows, maybe not. But like, look at who's connected, right? Look at their portfolios. A big one people have been watching now is Leopold Aschenbrenner. We talked about his whole situational awareness manifesto way back. Me and Al were on this for the past year, and his whole thing is the AI scaling curves. You know, it's going as expected, and with how AI is scaling, it's going to get crazier. And then now he runs a hedge fund. He's turned 200 million into 5 billion, I think, in the last year or two. So now everyone's just trying to copy his portfolio, you know. And he probably is dialed in. You know, his fiance apparently is like chief of staff at Anthropic. He used to be one of the early OpenAI researchers, even though he had like a rift with them or something and left. But it's like, okay, go with people who are connected. So Nancy Pelosi is connected, right? Going back, all right, let's just dive into Broadcom as a company. Okay. Semiconductor solutions, XPUs. Okay, so Google's TPUs are essentially Broadcom XPUs under a different name. Okay, they co-design custom silicon, yeah, them. They do the silicon design, fabrication, coordination, packaging, and supply chain, and then the hyperscaler, in this case Google, designs the architecture. Okay, so they kind of do the more execution, right? So it's essentially, I guess, correct me if I'm wrong, this is like a TSMC, you know how like a TSMC for NVIDIA, this is like a TSMC
exactly.
for Google.
They do like
Yes.
90% of Google's TPU stuff comes directly from Broadcom.
Mhm.
So one of the reasons I wanted to talk about it is if Google's sending that public, how might that affect Broadcom?
Right. I would say this would be a benefit for Broadcom as well. Like they're going to get money obviously off of Google. You know, if they sell the TPU, then Broadcom is also tied in with them. They get money from that through Google. I think that is a good positive catalyst for them. You know, and assuming there is lots of demand for the TPUs. I mean, you know, with the whole scaling, you can probably compete, differentiate on certain aspects, whether it's price and quality. Not everyone wants to be a customer of NVIDIA because NVIDIA is known to like really lock people into their ecosystem. Some companies want they want optionality. And so I think this, overall this should benefit them. 73 billion backlog, okay, there's a lot of demand here. So overall, you know, even though Broadcom has been moving, like, and it's a $2 trillion company. You know, it's huge, but like it's run quite a bit in recent years, but still, like as an investment going forward, similar to NVIDIA, just as a competition, like probably gonna have more, tailwinds and also future revenue to look forward to from this. So probably solid. Although it is high growth, so just keep in mind depending on market sentiment. All right, did you want to mention something?
I just wanted to mention like FedEx and UPS dipping because of the Amazon supply chain services thing this morning,
Okay.
and whether or not it might be good to buy the dip here.
Does anyone have FedEx or UPS or believes in their thesis? Okay. Yeah, I don't know, like, there's always a reaction, seems, Amazon anything. I know there's a big thing like Walgreens crashed when Amazon said they were getting into like pharmacies or something. So it's like the big short-term killer is like, oh my God, Amazon's getting into our business. Now we're screwed. Just like, oh my God, AI is getting into what software's dead. So doesn't seem like a huge drop. What was it? 10%. Okay, it was something, but it's not like, well, we'll see how it continues momentum-wise, right? No, that's the wrong one. Okay. I don't know. I think does anyone have any strong opinion about FedEx versus UPS versus Amazon?
I'll look at this from like the healthcare perspective, where I know like Amazon's trying to do what like HIMSS is doing, very bullish on HIMSS. I just think they'll be a strong competitor, but as far as like significant cannibalization of like their businesses, probably not a lot, I would guess.
Right.
But probably does lead to a little bit of more competition and margin compression in the respective spaces, but not something world-ending for their businesses, I would think. But I haven't looked into it deep enough to really know.
There we go. Yeah, some more of that. Market's kind of pricing that in. Yeah, you called it. Nice.
AI doesn't have shit on it.
Yeah. So UPS. Yeah. Well, hey, UPS is a big dividend stock now, 6% dividend. I don't know if that's healthier. I mean, they've been beaten down, like, they had their run post-COVID, of course, but now ever since they've just been dropping. They haven't really done well even after the whole 2022 bear market. So again, maybe Amazon it's justified, like Amazon just eating their lunch or taking more market share. It's just going to be harder to grow. So yeah, UPS, FedEx, those services, I don't know. And I don't know if they are innovating. Maybe they use AI in their systems, who knows? Maybe they can pull a Walmart and get more techie and compete, but who knows? All right, yeah, Al.
I don't know if this is gonna be the last question. I don't want our time.
Yeah,
to
let's
go
make it
over
the
here.
last one.
But it's similar to that Intel thing I was just talking about. Can you look at SMCI, super microcomputers?
So we actually talked about super microcomputer a couple meetings ago, I think, because they had the whole scandal. They were caught smuggling NVIDIA chips, Blackwell chips into China, and the stock dropped from the 30s down to like the teens. Now it's back up to about 27. We did conclude, and Mario was a SMCI bull, right?
Yeah.
You're still bullish on them.
I'm still holding.
That
for
look,
better or
if
worse.
anything, this might be bullish news because they're gonna do it again, probably, right? There's too much incentive. They've been caught doing shady stuff in the past, and they just keep doing. They don't care, and it's value. I mean, great valuation here. It's cash cow. The only risk is that they're tied into NVIDIA, but the CEO's buddies with Jensen. Yeah, they have a very good connections. It matters. Strong relationship with NVIDIA. So yeah, we'll start with Al. What was your?
That was just the question. What do you just see what you think about it?
So there's a risk in that they're dependent on basically NVIDIA, right? But I think it's still, if you're looking at the value, if you're looking at like the future for them, they're just going to keep raking in the money. and they've shown they don't care about like playing fast and loose with like the regulations. I think another risk though might be like if the Trump administration wants to crack down on them because of this whole, helping China thing. So it is possible.
Well, I don't know. They were caught once, and if you follow the situational awareness thesis, they're gonna have like cracked down on it or not. They're gonna have to try and bring them in closer to the sphere or completely exclude them. And they're not a small company, so they're probably not gonna exclude them. So they're gonna bring them in closer to the sphere. I mean, the market cap is smaller than
right. So if you think about this from a risk reward perspective, it's like, okay, well maybe they get hit with lawsuits or just crack down onto zero, or they become like a $100 billion giant with the demand for AI and what they're tied into NVIDIA. So from a risk reward perspective, as a speculative play, like that is a good expected value bet, I think, So anyone with any thoughts?
Were they the ones with malpractice accounting practices?
Yes. They've done everything. They don't care.
Still here.
All right. Anyone else? Otherwise, we're going to wrap this up. Thank you for coming. Hope you enjoyed it. Hope you got value out of it. And some of us are going to go to the 4th floor restaurant rendezvous. You're welcome to join. If not, thanks. And all right.
And thank you everyone who tuned in online too.
Thank you for everyone who tuned in online. Yes. All right.